Good morning, everybody. Welcome back to another episode of the Market Open. And it's Friday, August 1st. Welcome to August. And market's giving us a little nice, warm, fuzzy red welcome to this market. Folks, we're red. It is just on time to go red as we enter into the worst seasonal part of the market, which is August and September. And yeah, we are definitely red in the pre-markets, but we got some data today around non-farm payrolls that is only adding to why we are red. Palantir right here down 2%, Robinhood down 5%, Tessie down 1%, Nvidia down 2%, the S&P 500 627, folks. It was at 640 at one point yesterday. That's down about 1%. So we're going to talk a lot about some of the macro dynamics of this month in particular, because there's a lot to kind of break down historically to kind of understand why it's natural to be down in August. And this is the nature of being an investor. You just have to deal with the seasonal highs of July every year, up almost 2%. For the past decade, 1.28% on average. And this time it was up about 2.4. And then also the lows of August and what to expect as well. But the real headline this morning is non-farm payrolls. It is not a good number. Let's get into it. But what's worse is the revision. So first of all, U.S. non-farm payrolls, the amount of jobs we added in the United States of America, the market wanted 110,000. We got 73,000 jobs. That is a significant amount less than what was expected. And so it's like, all right, cool. We got less jobs than expected. It is what it is. Like, it was a bad month. We can move on from that, right? Well, not really, because it's time to go back to the past. Revisions, May, 125,000 jobs were gone. So we added 144,000 jobs in May. At least that was the headline. We actually only added 19,000 jobs. And then in June, instead of adding 147,000 jobs, it was revised down by 133,000, which means we only added 14,000 jobs. In June and May, we added less than 20,000 jobs per month, which means I don't even know if I trust the 73,000 we added in July. Because if that gets revised down in the next couple months, what if that's only like 15,000 jobs? That would be sort of in line with the trend of May and June. This is weird. It's very, very weird. And unfortunately, when people say it's hard to trust the BLS, or the Bureau of Economic Labor, and try to be able to like make sense of the arguments that they put out and the numbers that they put out, this is why. Because a lot of times the numbers end up getting revised to such a ridiculous number. It makes you wonder, how the heck did these numbers even get out there in the first place? And so the probability for a rate cut, I can see everyone in the chat being really confused right here. Yeah, I'm confused too. When I saw this in the morning, I quite frankly, couldn't believe it was revised down this much. But the probability for a rate cut yesterday was at 39%. Now it is at 75% for September. It is at 75% for September. So that's good, right? It looks like we're going to get our rate cut. Sorry, 67% now. So just above 65%. I would imagine the market's like, all right, we're going to cut at this point, because if the last 2 months we only added 20,000 jobs per month, or less than 20,000 jobs per month, then we've got an issue with the labor market. We've got an issue with the labor market. This means the private sector added 52,000 jobs on average over the past 3 months, ended July, the lowest such figure since August 2024. The 6-month average for private sector jobs was near 85,000 in July, near the low of 84,000 that was seen in October 2024 and June of 2025. It's a bit aggressive. It's a bit aggressive. I mean, one could argue we should be cutting like today based on some of this data, but it is pretty bad. Let's get a little bit more coverage on this, and then we will keep going from there.
Think all of their models, whether it's non-farm payrolls, inflation, you name it. The other good thing that I saw in this report, though, is the fact that a lot of the decreases that we've seen are actually coming from the federal government. Since January, non-farm payrolls at the federal level are down 84,000. So they're clearly making good progress in terms of cutting the bureaucracy.
Okay, Sarah, I promise I'll get to you, sir. I promise it. But I'm going to let Rick start talking, and I can't control what Leisman does, but I promise I'm going to get to you. Rick?
Yeah, listen, Anthony hit on something key. And I'm not saying that this data may or may not reflect some of the tariff issues, but we don't really know, because one of the big things that happened, as Anthony pointed out, is the seasonal adjustment process, not only on this data, but on lots of data, is in question. Surveys, whether it's University of Michigan, all of these things are under review in this new time we live in. And in terms of the staffing, all I know is if you look at staffing pre-2020 compared to today, your answers are going to be much more tightly wound than some of the numbers were thrown out there. In other words, just because we've had jumps and now we're retracting on some of the actual headcount here doesn't mean it's responsible for this. So in the end, where we go off the rails is that we try to politicize the interpretation of data. We've had a long timeline of a positive labor market, and the slowing isn't shocking to anybody. So trying to divine exactly what the catalyst is for these numbers and these huge revisions, well, yes, some might be tariffs, but exactly to what extent, we do not really know yet.
I mean, that's a fair point. Is it because of tariffs? Is it because of seasonal weakness? Is it because of employers being afraid that the tariffs are going to hurt consumer demand, so they're letting some employees go before they have to deal with raising prices, which would hurt the demand for their products? I mean, there could be a variety of things happening right here. It could also just be generally, anecdotally, a lot of you guys have said in the chat, it could, illegal immigration, that could be a big reason. A lot of you guys have said in the chat over the past couple of weeks, really the past couple of months, that the labor market's not good. And when we look at the data on these ADP private payrolls or non-farm payrolls, I'm like, all right, anecdotally, you guys are saying the labor market's bad, but then the data is saying it's good. So who's right? Turns out it seems like most people on the anecdotal level, at least today, are correct or were correct that the labor market is worse because these revisions are awful. I mean, they took away 250,000 jobs. So when you do something like that, it's just, it goes to show that whatever, I've been saying this for the past year, but I don't know if the Fed needs to completely re-architect the way, or the BLS that they characterize data or categorize data. But I feel like this is where Palantir would be necessary, right? You have a software that can actually aggregate all the right data and give you the most accurate simulations of that data versus whatever the hell the Fed does to try to figure out if there's jobs or not. Because the revisions is just a slap in the face to all Americans. The revisions is, hey, we lied to you, and we kind of don't care that we lied to you. And maybe we knew we were lying to you, but we lied to you. And you would think in one of the world's most technologically advanced economies, you would be able to figure out how many people added jobs or how many companies added jobs in a month. Like, that doesn't seem like the hardest thing to figure out. And if it is the hardest thing to figure out, okay, you can make some mistakes. You can be off by 5 to 10%. You can be off by 15%, off by 70%. That seems like there's an issue. Trump just tweeted, too little, too late. Jerome, too late. Powell is a disaster. Drop the rate. The good news is that tariffs are bringing billions of dollars into the USA. Okay, now here's the problem with Trump. American Jedi says, it's awful. I work in the mortgage lending industry, and I've been complaining about this for 3 years now. Well, there you go. You're starting to see some of this show up in the data. Trump can't take credit anymore for the jobs that we've been adding for the past couple of months. He's been taking credit for the past, every time we have a good non-farm payroll, he puts out a Truth Social post and is like, hey, look, the economy is, zooming, inflation's coming down, everything's great, yada, yada. He can't do that now because the past 2 months were horrible. This month was horrible. And so Trump's not going to talk about the job numbers because he doesn't want to bring up the fact that under his leadership, we are getting not as many jobs as we should be. And, the number one thing a president likes to tell is that they're adding jobs for the economy. So now he really does have to shift the blame. And he's already been blaming Jay Powell. But now, the public pressure is on because Jay Powell is the scapegoat for the fact that jobs are down so much and that the labor market is becoming weak. And look, it's a good thing to put some pressure on Jay Powell when you have these types of numbers. Like, maybe the pressure should be ramped up. But the point is, Trump's probably going to be even more annoyed because he can't take any credit for having jobs in our society on a non-farm payroll basis because there are no jobs. 10, 15,000 jobs a month is just not enough jobs for a president to take credit for. And then on top of that, last night, these are the confirmed new tariffs that you're looking on the screen. August is here. Switzerland, 39%, Indonesia, 19%, South Africa, 30%, Malaysia, 19%. These are slightly lower than the tariff rates that Trump put on the letters that he disclosed like 2 weeks ago. But nonetheless, these are new modified tariff rates. And this is another thing that Jay Powell and the Fed are going to have to figure out what it means for in terms of the broader economy and for inflation.
Executive order overnight. The president, as you said, increasing tariffs and adjusting them on dozens of countries across the world. All of these new rates set to take effect within 6 days from now, August 7th. So take a look here to break down everything the president has been doing. 7 trading partners now, this includes the EU, South Korea, Japan, locked in those framework deals, locking in those tariff rates of between 10 and 20% on all of their exports. And then another 62 countries, by my count, also saw their tariff rates, so-called reciprocal tariffs, increasing. Those will be between 10 and 41%. Those are on some major trading partners. That includes India at 25%, Thailand and Malaysia both at 19%. So some significant levels there. And then for nearly everybody else, the baseline tariff will remain at 10%. So a little bit of a surprise there that level didn't move higher. Now, all of that, again, taking effect next week, but 3 countries not included in any of those categories were China, Mexico, and Canada. So China holding firm at 30% where it's been for now. Mexico also holding the status quo at 25% after it struck a deal yesterday to keep negotiating with the White House for another 90 days. But Canada never reached any sort of deal. So overnight, its tariff jumped 10 percentage points up to 35%. So now you can take a look at it this way. I think this simplifies everything that happened. About 65% of everything the U.S. buys from abroad comes from just 5 trading partners, and tariffs on all of those goods will now start at a minimum 15%. And guys, President Trump spoke with NBC after he signed this executive order yesterday. They were talking about the tariffs. He said it is too late as of now for other countries to avoid these tariffs. But at the same time, he said his door is never completely closed to compelling offers. So that doesn't mean someone might come along in 4 weeks from now or something like it and could strike some sort of a deal. So on that question of how firm these are, he's leaving the door open at least a little bit. Guys.
I mean, the door is completely open. Obviously, they don't want to have massive tariffs because those tariffs would be perceptually a form of inflation. And given the labor market's weak, that's not a good combination to have that happen at the same time. Here's the worst thing that could happen. You want to know the absolute worst thing that could happen? The absolute worst thing that could happen is inflation becomes very sticky. Like above 3% type of sticky on the headline. We're at 2.7 on CPI. Imagine it gets to, like, just for a thought experiment, imagine it gets to 3.1, 3.2. And then the labor market tanks. And now Jay Powell is thinking, wait a second, labor market's down, but my mandate, stagflation essentially is inflation. Now the mandate is the labor market as well, but like, wait a second, he doesn't want inflation to reaccelerate like it was in 2022. So that would be the okay, bull market kind of on pause type of scenario. What we're seeing right now in terms of the red, we'll talk more about some of the seasonal weakness. Honestly, I don't think that's because of the non-farm payrolls. That the non-farm payrolls don't help. The revisions don't help, which is why Grab is down and AMD is down and SoFi is down and Google's down, like Google below 190. The real reason is because we're getting into August and I think the market's just ready to take a breather. But what would actually get Google back to like 150 or something is if there's no cuts because of stagflation. I don't think that's going to happen, but that is something I think Trump needs to take very seriously, because if the tariffs are inflationary, which again, in the next 6 months, we're going to have a lot more data on if they were or if they could be, and the labor market's weak, you'll probably get a cut, but you might get a cut into a weak economy, which means people would still be afraid to buy stocks, or you just won't get a cut. And then people will really be afraid to buy stocks because if the market's weak and there's no support from a fiscal perspective, AKA the Fed, then we've got issues. Because we're probably going to get even more labor market weakness at that point because more people are going to lose their jobs. So, I think the majority of the weakness today is more so because we're getting into August. It's almost like clockwork. It is what it is. I mean, if we got to celebrate a 2% up July, and just for the fact that it was July, I mean, there was no major reasons why the market should have gone up in July, right? There's not like massive trade deals back and forth. I mean, like even when they announced trade deals, it was just like a framework of a trade deal. It wasn't anything official. So it was just seasonally. This is what happens in July. Historically, it's how the trends operate. This is the same thing happening in August. You just have to be ready for it as an investor. But the non-farm payroll aspect of this now, based on these revisions of more than 80%, is really, I think, the broader story. Blame it on August is not a good excuse. Well, okay, you can say it's not a good excuse, but then take a look at this chart. This is average market returns in the S&P 500 from 1950 to 2020. I'm not trying to blame it on August 1st for the hell of it. Like the data doesn't lie. August tends to be, and we've been talking about this for the past couple of weeks, right? The sort of I've asked, like, I think I did a poll almost 10 times over the past 2 weeks of, hey, do you think August is going to be a slump? And the majority of the time, 70% of you said August is going to be nasty, because a lot of you have been through this before, right? A lot of you have just dealt with the fact that the summer is not the best. Here's another chart to look at this. The median 2-week returns for the S&P 500 since 1950. August tends to suck. And September tends to suck. Yeah, those summer vacations have to get paid somehow. So Trump will say August is Biden month. Yeah, this will go back to being Biden's stock market pretty soon if we get some issues. So that may happen. Now, remember, last year, August really sucked because of the yen carry trade. This is what Kris was talking about yesterday. I don't know if we're going to have a catalyst that could create that type of disgusting August, like the real gut-wrenching type of pain. And if we don't, hopefully it's just weak and it's just, a dip that everyone can buy. Definitely a dip that I think hedge fund managers, money managers would like to buy, assuming the macro is going to be okay. But yeah, if we do get a catalyst, things could get worse. I don't know what that catalyst is. Now, maybe the catalyst is trade deals, but that catalyst is kind of already over because they announced it. Here are all the new tariffs. I would imagine you're going to get a lot of negotiation pretty soon on these tariffs, but that hopefully is not the reason why August continues to get hit in some meaningful way. So that's what we got. Yes, I'll link this post in the chat, and you can see this chart, and then the comment underneath this has the other chart as well. Okay, so we just talked about the economy being weak from a labor market perspective. We talked about August seasonal weakness. What did we not talk about? We did not talk about the one stock that doesn't care about anything. Ladies and gentlemen, Figma is up 20% in the pre-markets. I don't know what is going on with this thing. This to me feels very toppy. I'm sorry. It's just how I feel. My dad got an allocation of 19 shares of Figma. He was one of the lucky people on Robinhood that didn't only get one share. He sold at 135 yesterday, locked in $2,000 of profit. If this thing goes to 200, it is what it is today. But I do think that this is a bit ridiculous. Dylan Field, the CEO of Figma, his compensation package is structured on a 10-year trajectory of getting the stock above $120. Now, it has to be there for a certain amount of time, but the fact that it's there 5 hours or 24 hours after it IPOs is kind of insane. And as a result, this is kind of a little bit of madness that we're seeing in the markets. Labor market's weak, but people are YOLOing into Figma. Let's get a little bit more coverage on this, but I'm very curious to see how this one holds up as we get into the market open today.
Figma right now, pre-market, $129. Two pieces. He did have a comment. I wish we had shown it. First tranche.
60 days.
Has to be there for 60 days, but then there's other parts where they have to be for years. So, and then he has to hold. So we'll see. But it is quite something. The other question, of course, and Bill Gurley talking about this on X last night. How much money did Figma just leave on the table? How mispriced was this? If you're Dylan on a morning like today or at the end of last night, beyond going out and hopefully having a cocktail, are you saying to yourself, I'm having a cocktail because I'm excited and I'm celebrating? Or am I having a cocktail because these Wall Street bankers screwed this up so badly in terms of the supply and demand of my shares and how they were priced? And that's still always the question.
Because the company didn't get the money it could have had. It's like,
I mean, it's just,
where they're selling shares.
Now, what do they mean by that? So I did some digging last night, and this is how badly Wall Street screwed Figma. So Figma sold 36 million shares to the public at $33 a share. Okay, so Figma said, hey, we have 36 million shares. We're going to give it to the public, the public markets, people like you and me. And we're going to give you it for $33 a share, and we're going to get $1.2 billion. So Goldman Sachs, JP Morgan said, okay, cool. We are going to take those 36 million shares. We are going to underwrite the IPO. Underwriting is a fancy way to say, hey, we're going to try to figure out what the business is worth, and we're going to support the IPO to make sure it's successful and make sure that the stock goes public and there's liquidity, all that stuff. And after all of our fancy underwriting and talking to all of our lawyers, Figma, we've decided you guys are worth $33, about $20 billion in market cap. Figma, for whatever reason, and maybe there's some nuance to why they said yes to this valuation, but they said yes. They said, sure, good idea. $33, give us the $1.2 billion. And then JP Morgan and Goldman Sachs took those 36 million shares, 24 from investors, like the VCs that invested 10 years ago, and then 12 million from the insiders. And they took the 36 million shares and they went to their fancy clients. I was actually talking to a high net worth individual yesterday who got contacted by Goldman Sachs a week ago, who had the opportunity to purchase shares at $33. For all of us, we're like begging the Robinhood lottery that we get chosen for the allocation. But when you're very, very high net worth, you get these people coming to you and they say, hey, do you want to buy $1 million worth of Figma at 33 bucks? Goldman Sachs, or not 33 bucks, at 45, 50, 65, 75 bucks, $100 a share, right? So Goldman Sachs, JP Morgan, they take these shares, they go to these high net worth individuals, family offices, investment funds, et cetera, price them at a significantly higher level than the IPO price that Figma got, and they make a difference in the spread. The difference in this spread based on the closing price right here, or based on the opening price at 95, $2 billion, which means Figma could have had $3 billion on the balance sheet. Actually, $4 billion, because they already have $1 billion right now based on the Adobe fee for breaking up the acquisition. And they could have been a public company with $4 billion in cash. It is very valuable to be a public company with $4 billion in cash, even if you just put it into T-bills and get 4%. I mean, like, that's just like a nice little anchor to have on your earnings. And instead, they walk away with $1.2 billion. The banks make $2 billion, which is why financials might be the place to go long at, given this is what they're going to do for Anduril and Stripe and, you know, maybe Palmer Luckey and the Carlson brothers at Stripe. Don't let them basically cheap shot the IPO as much. But I have no idea why Figma agreed to this type of valuation. I mean, you would have to think they have a little bit of a feel of how successful the IPO could go, or maybe they just wanted to guarantee the IPO to be so successful that they took a much more cheaper price, right? A much cheaper price to be able to like guarantee that it would be good. But they could have gone public at $100 and it still would have been successful. They would have raised almost $4 billion. It is what it is, right? They could have used that money to build the business, then line the bank's fund. It's a very dirty game on Wall Street, but this is how Wall Street figured it out. Or this is how they consistently figured it out for some of these very hot IPOs. And I think, you know, if Stripe went public or Anduril went public, the same thing would happen unless those companies go public through a DPO, which is why shout out to Palantir. Palantir went public through a DPO. So the banks did not get rich. This is one of the reasons the banks didn't upgrade Palantir stock for a long time. They had no incentive to, right? Because when the banks own a lot of Figma, guess what? JP Morgan's going to come out with a very nice little price target on Figma. Whereas if the banks don't own any of Palantir because the employees are getting liquidity and retail has access to those shares at $10 when they DPO'd, which now has been a phenomenal return, the banks have no incentive to upgrade the stock. It is a ruthless game on Wall Street, but it seems like that is what's happening with Figma. Speaking of Palantir, we did get a big deal for Palantir yesterday. $10 billion 10-year enterprise agreement that establishes a comprehensive framework for the Army's future and software data needs. Now, before everyone goes crazy about this, this is not literally $10 billion. Otherwise, the stock would have been reacting a lot more. It is a $10 billion framework for the Army over the course of 10 years to pay Palantir for their services. It's worth up to $10 billion. And the article also came out that said the Army is not actually committed, right? They're not like legit in paper committed to spending $10 billion. It's just $10 billion is the amount that is available for allocation for some of the software. And it's not only Palantir. There's 75 other contract vehicles that the Army is sort of consolidating. The broader thesis on this is that a lot of the contracts that Palantir already has and new contracts that they're eventually going to get, like Army Vantage, for example, which is one of their biggest contracts, that is going to be procured and consolidated in a much easier way for the government, and particularly the Army, to be able to buy software. And this is one of the things that Shyam Sankar has been talking about for a long time. He's been talking about this idea of government procurement needing to be a lot more inclusive and make a lot more sense versus it being run in such a political way that it's been run for a long time. And Palantir is no stranger to this. They sued the government over lack of procurement and they won because, the government ended up having political connections based on the software that they bought. So it's a big deal for Palantir, especially because Palantir is leading this 10-year effort that's worth $10 billion. It's just the stock's not going to react because there's not a guarantee of $1 billion a year, because that would increase the earnings estimates by like 30%, right? So immediately you would think the stock would react to that, but that's not exactly how the deal is working. The broader point is that Palantir is at the center of a new way to procure software, and the fact that they're choosing Palantir to be at the center just shows how dependent they are on Palantir and how much they want to include Palantir in these future software conversations. And so that is the good thing about the deal that we got. Is it time to start taking profits? That is a good question. Let's put that up for poll in the chat. Are you taking profits on this day in August, or have you already begun taking profits as we end out Q3? Is it time to take profits? Look, my take on this is very simple. It's what I've been saying for the past couple of days. I am not taking profits because a lot of these positions I believe are going to do very well for the next 5 years, definitely towards the end of the year. By the way, that chart that I showed that is around August just not being the best. September is also not the best, but then October, November, and December are incredible, right? So it's kind of like if you sell now, you have to figure out exactly when to time it to get back in. And if you suck at timing, are you going to be able to do it? Like Robinhood right here is at 98. It's below 100. Does Robinhood deserve to be below 100 based on those earnings? Absolutely not. I mean, absolutely not. Not in my valuation estimates and definitely not based on those earnings. But it's down 5% because you got algos coming in. Everyone kind of saw the algorithmic reaction that we had yesterday in the morning. And people are selling it off. So if I sell Robinhood at 97 and take some profits, what price do I want to get back in at? What price does it really bottom at? Does it go to 60 again? Like, I don't know. I kind of doubt it's going to be that bad. Which means you kind of just hold straight. This is when covered calls really do benefit because in the face of weakness or flatness in the stock, if you have any covered calls, you can generate premium from them. You can roll them down so that you can get closer to the current stock price and collect more premium. And then hopefully you can roll them back up when the seasonal weakness is over. Again, it's a little bit of timing on that as well. But I think selling is more so a personal decision based on how you think of the market versus like, hey, the market's tanking. I have to sell and get out of these positions. It doesn't feel like that. Doesn't exactly feel like that. 58% of you said no, this is not the time to sell. And again, when it comes to is the time to sell, or if it's not the time to sell, it's more so a question of, like, do you feel comfortable taking profits? And if you do, you do. If you don't, you don't. It is what it is. But like on SoFi, right? If you bought it at 7, just saw the thing go to 25, now it's back at 21. Like, do you really want to sell at 21? Is it going back to 7 again? Probably not. The probability of SoFi going to 25 versus 7 seems way more likely skewed to the upside. So it's a question of being patient over the next couple months if SoFi even dips back to like 15. But does that mean selling your $7 average at 21 to try to get it at a lower price just for the sake of getting it at a lower price? Unless you actually have to do something with that money, that's different. But if not, then holding still is also not that crazy. Alexander the Great says, admit you inflate the polls with your opinion before the votes. Okay, if you think I can inflate the polls with my opinion, given the type of chat that I have, when Devin Ryan, one of the premier equity research analysts, is on the screen and I'm trying to not look at the chat because every other comment is, this guy looks like Tucker Carlson. Why is he in the bathroom? Who is he in Tucker Carlson's bathroom? Like, if you think my chat is influenced by my opinion on the poll and wouldn't disagree with me, you got the wrong chat. Dude, you guys were crazy, bro. You guys were like, I can't remember some of the comments, but I think I saw one. I don't remember what it was, but there was one comment I saw where I legitimately was about to like do this on the camera and do my chuckle because it would be disrespectful to laugh while a guest is on this. Because some of these comments, bro, I don't know how you guys come up with this stuff. I don't, but you do. And it was absolutely hilarious. So yes, I think everyone here can hopefully think for themselves. Okay, Apple, Amazon. We got to talk about that. We got all this non-farm payroll stuff, but we didn't even talk about Apple, Amazon. Apple, let's get into it. TLDR, they crushed. Apple beat revenue estimates by $5 billion. In my opinion, they absolutely smashed. Tim Cook had pretty good guidance. The iPhone beat by $4 billion. They took $1 billion tariff hit and they still crushed, which was incredible. And they basically said, hey, Q3 is not going to be as bad as some people expected. Gross margins were up and China was up. So anything that like Apple, you were scared about them not doing well at, whether it's services, gross margins, etc., they came out and they said, hey, we're good to go, which is why the stock is getting some love. Now, obviously, their AI efforts are not the best. Tim Cook did say we are looking at M&A for AI. A lot of people are thinking Perplexity. Maybe that's going to happen. Maybe that's not. We'll see. But it was a pretty damn good quarter, in my opinion. And given the expectations were so, hit, they just needed something to do well, and they ended up getting that something. Also, the only thing they missed on was iPad. So outside of that, not the worst thing in the world. Then you had Amazon. And unfortunately, Amazon, although it had a phenomenal quarter, like absolutely phenomenal quarter across the board, beat on the top and the bottom, beat on advertising, beat on EPS, beat on revenue. Guidance was an amazing beat as well. Almost $4 billion they beat on guidance. That stock, it was down 7% last night. Is it still down? It's still down 7%. The reason it's down 7% is for two reasons. Number one, they didn't grow as much as cloud on Azure. So Amazon and Azure, AWS and Azure are doing roughly the same amount of revenue per quarter, but AWS is growing at 39%. Azure is growing at 39%. AWS is growing at 17%. They beat very little bit, but they, it just wasn't that exciting. Microsoft was up in the pre-market or in the after hours after Amazon came out because the market kind of, in my opinion, is thinking, hey, maybe cloud is being won by Azure, even though AWS is doing phenomenal. It does have the lowest growth rate out of GCP and Azure in the cloud computing sector. And then the other reason is someone asked Jassy, what's going to happen if the tariffs go into effect on Amazon? And he was like, we don't know who's going to bear the cost for the tariffs. And when you say something like that, it makes the street think, okay, are the consumers going to bear the cost, which is going to be bad on demand, bad on potentially margins? Or are you guys going to bear the cost, which is going to be really bad on margins because you don't want to piss Trump off? No one knows. No one knows. And as a result, I think that's kind of the pain that the market is seeing right now. Triple V, thank you for the 20,000. What is KES? KES. Where the heck is this guy? Kenya? He's in Kenya right now. This is the most mysterious man, dude. 20,000 Kenyan shillings is 150 US dollars. Okay. Triple V, I don't know why the heck you're in Kenya. I guess you're doing some business down there. But thank you for the $150 super chat. 20,000. This is the first. 20,000 Kenyan shillings. There you go. He's a man of mystery. He's a man of mystery. Triple V is a Kenyan prince. Exactly. He is a Kenyan prince. Dude, he was in the UK. He was sending pounds a while ago. Then he went back to dollars. Now he's in Kenya. He's doing something. He's doing something when it comes to business. Triple V, for those that don't know, actually runs and operates a pretty big business that does, if I'm not wrong, a couple $100 million in revenue per year. So yeah, he finds the time to join these streams, which I'm very grateful for, but he is also, constantly busy while he's investing his own money and he's actually running a legit business. So he might be in Kenya to further advance that business. Figma right here, 139, folks, 139. I mean, let me do another poll right here. Let's see what people are thinking. Figma to 200, yes or no? Figma to 200, yes or no? I have a weird feeling it's going to happen. Today. I don't know. Kind of feels like they're going to run it up. There is a 2x Figma that is being introduced next week. A 2x Figma just went public. They're doing a 2x Figma ETF. It just feels a little aggressive, bro. ARK right here down 3%. Coinbase, nasty earnings, dude. Coinbase earnings were really bad. Was not good. Coinbase right here down about 10%. Trading volumes were just not that good. MicroStrategy as well, that's down 2%. MicroStrategy beat EPS by 46,000%, but the market didn't care. Why did the market not care? Because at the end of the day, it's Bitcoin-related profits, which are not exactly quote-unquote profits because it's just the unrealized gain on Bitcoin based on these accounting rules. I can't believe there were people in the MicroStrategy community that was like, gotta watch out, MSTR is going to beat by 50,000%, market's going to love it. It's like, no, the market can be irrational, but the market's not always just absolutely stupid. Just because you have Bitcoin on the balance sheet that went up in value doesn't mean MicroStrategy deserves to be worth $1,000 a share. And just because the headline says 46,000% EPS beat doesn't mean that the thing's going to go up by 40%, So that was a nothing burger. Saylor is raising. Oh, the one thing on MicroStrategy's earnings, though, let me just show this. This actually was very interesting to me. And again, I like MicroStrategy. I did a deep dive on it. I own Misty. I have nothing against Saylor. I honestly do think he is one of the smarter people for figuring out how to capitalize the balance sheet with Bitcoin and then issue all this 0% interest free debt. But still, it's the stock's not going to go up just because Bitcoin went up based on an EPS perspective. Here's what MSTR put out, which I think is very interesting. 57% of you say no on Figma to 200. So Saylor says if our NAV, our MNAV, our premium on our net asset value is above 4x, I think right now it's at 2.5 if I'm not wrong, or around 2.3, they will issue Bitcoin, which would be, they will issue shares of MSTR, dilute shareholders to buy Bitcoin. That would mean MSTR's price is $1,000. If it's between 2.5 and 4, they will strategically and opportunistically issue MSTR to acquire Bitcoin. If it's below 2.5, which is right now, They will not issue MSTR except to pay interest on debt obligations and fund preferred equity dividends, which means right now at $400, Saylor is committed to saying, hey, we will not dilute shareholders just to buy Bitcoin. We will only dilute you to pay our interest or to fund preferred equity dividends, which they did yesterday to the tune of another $4 billion. And then if it's below NAV, below 1x NAV, they will consider using credit spreads to repurchase or issuing credit to repurchase MSTR. So they will buy back their shares if it's below NAV, MNAV. If it's in between, they will only pay down their debt and fund preferred equities. If it's above, they will issue MSTR. And if it's massively above, aka $1,000 a share, 4x MNAV, they will actively issue MicroStrategy to acquire Bitcoin. Basically, he's saying, hey, this is how you're going to get diluted. This is how you're not going to get diluted. Take it or leave it. Because you have a lot of the MSTR community that's starting to get mad at Saylor for all this dilution. And then you got a lot of other people, MicroStrategy right here down 3%, that don't care about the dilution because they know that it's necessary to fund the tools for buying more Bitcoin. And as a result, you know, that's kind of just how you have to consider the long-term thesis on MSTR. But if you think Bitcoin's going to a million, MSTR down 2.3% right now is not that big of a deal, because you know that the more Bitcoin they have, the better that the overall potential for the company will become. A little bit of an update on Grab. The street has them above $6 across the board. The street has them above $6 across the board. I read one of the equity reports from Benchmark yesterday. I will post it later. But the report basically said, hey, we really like what they're doing. We raised the price target to $6. Oh, here it is right here. I'll link this in the chat. Anyone can read this. It came out yesterday. I'm not going to read the whole thing, but basically the equity analyst was like, hey, yeah, the margins are down a little bit, but we don't care because there is such a big growth opportunity. I mean, it was one of the most bullish reports I ever read. They were just like, hey, they're growing at every single sector. They are taking so much market share. Financial services is exploding. They have a unique moat when it comes to being able to build out the ecosystem. Their margins eventually will get better, but we support, at least Benchmark said, we support sacrificing margins for growth because right now they have an opportunity where they can potentially take the entire region. And unfortunately, the stock is not cooperating. In August, maybe the stock gets even worse because of the nature of August cyclicality, but I remain long. And to me, it really is a long-term play. I'll be buying more if it continues to go down. That's just how I'm thinking of the overall thesis. So that's what you got on Grab. Any thoughts on Hood? I think Hood crushed it. I have no new thoughts on Hood. I think that it's just like, dude, the stock market's going to be the stock market. Hood does not deserve to be below 100, not by any sense of the imagination. NVIDIA, after Meta and Microsoft, does not deserve to be back in the low 170s. By the way, where is Meta after those earnings? Meta's down 2%. I mean, will this 10% pump even last on Meta? Will it actually last? Microsoft already lost the majority of its pump yesterday. Microsoft back at 531. That's well below 4 trillion now. Meta still below 2 trillion. It got very close yesterday. I mean, when you get into August, you never know. Google getting hit again below 190. Like, you just never know. I mean, when you're getting into this type of seasonal weakness, we just have to deal with it. And ultimately, we'll see how this plays out over the next month. All right, we got 4 minutes until the market opens. One company that did smash earnings outside of Apple is Reddit. Reddit right here up 15%. Reddit increased revenues by 80%, DAUs by 22%. They're profitable. They increased adjusted EBITDA from 160 million expected to 195 million in Q3 guidance. I mean, they did what they had to do. It was pretty strong, and as a result, Reddit is getting some momentum. And now Reddit's very high beta, so you can hold, but for now, it seems like Reddit has deservedly got this earnings pump. Just a question of how the market thinks of it over the coming weeks as we get into August. So that's what we got. Are you buying the dip? I already bought the dip yesterday. On Grab, at least. I will wait. I want to see if we get some really juicy prices, and then we'll see if we can buy more of the dip. But at this point, we just don't know what's going to happen in August. And by the way, one bad day in August, and we're not even in the market open yet, but one bad pre-market doesn't say that the rest of August is going to suck, right? Historically, August sucks, but who knows? Maybe August doesn't suck this time. We're going to see. It's one day of data. July, by the way, sucked for the first 10 days. The first 10 days of this July, it didn't feel like it was going to be super green. And then the last 20 days, it just went to the moon. So we're going to have to see kind of how this plays out as we get into the rest of the month. Here is a little bit of coverage on the Fed governors dissenting on the rate cut. Again, Waller and Bowman said it's time to cut. We didn't end up cutting. Maybe this non-farm payroll data makes it obvious that we should cut. And then we got the market open in a couple minutes.
For the rest of this year, he says inflation is close to target, quote, if we put aside tariff effects. And he believes they'll be temporary. Both he and Bowman are going to talk about that, this idea of an ex-tariff inflation calculation, including expected data revisions. Payroll growth is, quote, near stall speed. And there's downside risks to the labor market, and they have increased. And we should not wait until the labor market deteriorates before we close. And if we could just go right away, by the way, to the Bowman comments, she makes very similar remarks regarding this, where she says inflation has moved considerably closer to our target after excluding temporary effects of tariffs. Economic growth has slowed markedly, she says. Labor market showing increasing signs of fragility, and a neutral setting for policy is the right way to go. I'll leave it there, guys, except that she also says that a cut would have hedged against this weakness. So making cases, there are economic cases for cutting that are not crazy. There's some logic to it. And it's just a matter of this idea of tariffs being one-off price increases that the Fed should look through now, and how much real weakness you see.
And especially they should look through it right now if we do really have a weak labor market. For those that are just joining, we got a minute until the market opens. Again, the big headline today was non-farm payrolls came in at 73,000 versus 110,000 expected. That was not the best, but the revisions is really what's getting everyone worried. May payrolls were revised down by 125,000 jobs to just 19,000 added versus 144,000. And then June was revised down by 133,000 to just 14,000 from 147,000. So now the rate cut probabilities have gone up. It makes sense to get a rate cut because if you have these types of revisions, it means for the past 3 months, we did not grow jobs in the United States of America. That's what these revisions signal, which begs the question if you can even trust the 73,000 jobs that we added today, or if those are going to get revised. And so we're going to find out kind of how the market thinks of it, how the Fed thinks of it as well. But to start off August, definitely not the best stat. And ultimately, we'll see how the market interprets this data as we get into the rest of the month. All right, folks, here we go. All eyes on Figma. Let's see what we got. It is Friday, August 1st, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. All right, Figma is up 15%. Figma is up 15%. She goes green. She's holding on to 134. She's not tanking, not letting it go super high or super low, but she is at 15%. So Figma is green. MicroStrategy down 3%. Coinbase down 11%. Arc Innovation down 4%. Amazon down 7%. You don't see down Amazon 7% that often, folks. There you go. You got Amazon. Look at that candle. 213 a touch right now at 217. AMD, ugly, down 3.5. NVIDIA down 2.7. United Health was green in the pre-markets. That one goes down. PayPal down 1%. Palantir down 3%. S&P down 1%. This is, wow, if this holds, we have gone 25 days without a 1% move on the S&P 500 up or down. It's the longest streak in a year since we had a 1% move on the S&P 500 up or down. Today, if this holds, this is going to be our first 1% down day potentially on the S&P in a while. Tesla flat on the day, but that's down a little bit. Reddit, that's up 12%. It was up 20% at one point. Robinhood just getting destroyed, down 8%. Robinhood's very high beta. The market, if it goes down, high beta gets hit. Robinhood's getting hit. Also, Coinbase is probably taking down Robinhood. Even though Coinbase earnings were horrible, Robinhood earnings were amazing, but nonetheless, they sometimes trade in tandem with each other. The Qs, NASDAQ down 1.2, Adobe down 0.5%, Lam Research down 1.5, Oscar is down 1/3%, Google back to 190, a little recovery, Arista Networks, that's down 5%, Cloudflare, that is also down. Joby, is that one going a little green? Joby is up 6%, so in the face of all this red, Joby is green. AMD still down 2.9, Figma continues to go green. Amazon's down 17%. The market's willing to pay 80 times sales for Figma, up 17%. Is Opendoor also green? Opendoor seems like it is. Opendoor is green. So Opendoor and Figma leading the way. And Apple. Apple deserves it on those earnings. But Opendoor and Figma leading the way from what we got. Webull down 5%. Nebius down 5%. They were really green yesterday after Microsoft Meta. Where are Microsoft and Meta? Microsoft right here is down. Meta is down 2%. Grabby grab below 480. Grab getting hit. Algos. And if the S&P falls 1.1, you're going to get a stock like Grab that gets sold off. SoFi does not deserve to be below 22 after those earnings. SoFi 21.34. That's getting hit. How about HIMS? It hit 70 yesterday. HIMS 64.59. Still holding the high 60s or the low 60s, which any HIMS shareholder should be happy about. But that one's down 2.4% today. Spotify's down. Royal Caribbean's down 4%. TSM's down 3%. Broadcom's down 3%. Boeing's down 2%. Obviously, it feels like everything's falling all at once, which means eventually, hopefully today, there's going to be a bit of an intraday low, and that will begin to reverse. Maybe not, but that's what we saw yesterday. We potentially have a shot of seeing that today. Micron back to 105. That's down 3%. Hoodie, is it going to go below 90? Hoodie's at 94.23, holding up for now. That's down 8.5%. And we are seeing red across the board. Figma 141. You got to be kidding me, dude. Like, and I'm not even mad about anyone who's making money on Figma. It's more so a question of like, what is this market doing? They're selling off Amazon for putting up $30 billion in AWS revenue to buy Figma for what? Like, for what? There is no reason. Like, it's just nonsense. So this is the stuff that makes you wonder, what type of market are we actually in? Coinbase down 13%, and then Apple losing a little bit of its pump. SoFi right here still down 6%, and then Palantir 153. Palantir down 3%. Palantir down 3%. Yeah, I think this is everyone's biggest drawdown since April. Roundabout. The red days is when we all kind of have to be together. So you can put in the chat how much you're down today. I am down $72,000, $72,718.07. Fun day. Palantir right here, 153. S&P. Wow, S&P is continuing to fall, folks. Think about it like this. This is why the market is the market. We spent 30 days going up 2.4%. Let me say that again. In July, we spent, 31 days going up 2.4% of the S&P. In one day, August 1st, we have lost half of that. In one day, we have lost half of that if the S&P 500 continues to be down 1.25. 30 days of progress gone in a few hours. I mean, it's wild. It's absolutely wild. Absolutely wild. A lot of you guys down 30,000, 54,000, down 50,000, 44,000. My year-to-date just got smoked. I would imagine everyone's year-to-date is getting hit a little bit. Now, granted, remember, the year-to-date in July was like exceptional. At one point, I was up 70% year-to-date on like a Monday. By Friday, it was 95%. So like there was a little bit of just like wonkiness on those year-to-dates, and that's why it's a year-to-date, right? It's not judged in a month. It's not judged in 2 months. You give it 12 months and kind of have a much more accurate picture. But yeah, this is one of those days that'll wreck the year-to-date portfolio performance. PayPal right here below 70. They really hate PayPal, dude. They really hate PayPal. Open Door is up 10%. Yeah, this doesn't make sense. Open Door and Figma. Figma now tanking a little bit. It's still up 14, but it's down from 140 to 131. We'll see if that can hold. And then Open Door up 10 is just kind of stupid. But that's up. ASML is holding up a little bit. ASML below 700. Yeah, I would say it's holding up, but this is definitely a crappy month for ASML since earnings. This thing was at 850. It's up from 681 back to 691, but goodness, dude. Below 700 feels aggressive. House of Cards down 300,000. Nerome's down 400,000. Alex down 160. Geo says, I've been hedging with short QQQ. Not bad. Not bad. That's a little bit of a hedge. Let me just say one thing about hedging real quick, because for those that are on financial Twitter, at least, you're going to see a lot of these posts. And I just want to warn everybody. There are big accounts that are going to do the same playbook that they did back in April. And what is their playbook? Their playbook is when the market tanks, they try to take advantage of that fear on regular investors, not active portfolio managers, but people that manage their portfolio, but they're not literally operating like a hedge fund. And they will accuse you and gaslight you into thinking you're the stupidest person in the world and you're an idiot for not buying puts or not selling calls or not doing put credit spreads to hedge or buying short QQQ leaps or yada, yada, yada. The only reason they will be doing that is to get you to buy their Discord and Patreon subscription to teach you, quote unquote, teach you how to hedge in a market when the market goes down. The majority of people do not need to hedge if you're a long-term investor, because hedging is a very it's not necessarily complicated, but it's a very unique strategy that you need to actively manage to be able to not lose a ton of money on the hedge, because that can go the wrong way. And also, if you're buying SoFi for the next 5 years, okay, it's down from 25 to 21. If your average is 14, you kind of don't care, because 5 years from now, SoFi should be higher. So just watch out for the people that make you feel like an idiot for not buying puts on SoFi, because the most obvious market was about to collapse and you didn't buy puts, and therefore you're an idiot, because all they want to do is sell subscriptions. And they did this in April, and they got their face wrecked when the market rebounded. They were going bearish NVIDIA at 90, and like that didn't work out. So you just got to watch out for people that want to take advantage of your fear, because that's just not the right way, I think, to, you know, build an audience or try to monetize. MicroStrategy right here down 4%, Coinbase down 13, Arc Innovation down 4, PayPal down 1, UNH still getting hit. You would think UNH would get some safety as a defensive, but those earnings guidance was so that it's not really getting that momentum. Casey says buying more is my hedge. Dude, one of the funniest things one of you guys said in the chat was, I think a year ago, I was like, so who has an emergency savings fund? And someone was like, Hood at 20 is an emergency. So I depleted my emergency savings fund to buy Hood. It worked out because Hood at 20 was an emergency back then. I think that was August back in 2024. But that was hilarious. I was like, yeah, well, these prices are an emergency, so I don't have an emergency fund anymore. But nonetheless, it's the nature of markets. It's going to go up, it's going to go down, and seasonally this stuff happens. Palantir right here down 3%, S&P down 1.2, S&P getting a little bit of a green candle, along with Palantir getting a green candle. Did we bottom? 152.50, 940. No, 835. Is that the bottom across the board? Grab got a green candle. UNH has a green candle. AMD's got a green candle. Amazon. Maybe that was it, folks. Maybe that was it. Maybe 9:37, which is Eastern Standard Time. 9:37. It's right now 9:38. Literally a minute ago. Maybe we got a bit of a bottom. Him's got a green candle. Robinhood 93.92. Now it's at 95. Now it's at 96. NVIDIA 172.73 intraday low. Now it's at 173.50. These are moving basically $1.50 above where they intraday bottomed at, if that was the intraday bottom. SoFi right here 21.32. That is also green as well. Meta 7.59. That also has a green candle. S&P, does that have a green candle? No, S&P doesn't. Now it's still up. That's a very tiny green. It's still up 623.71. That's the level on the S&P. We're at 624.15. So very barely holding on. But still, where's Figma? Okay, good. She's tanking. Not good as in I want her to tank, but like good for my dad, because my dad was like, dude, if this thing goes to 200 tomorrow, I'm going to be so upset. And I was like, Dad, like you turn $600 into $2,500. What are you going to be upset? Like, yeah, maybe it goes to 200. Who cares? But like, take the money, run. Like, you got it, you know? He's like, yeah, but if it goes to 200, I could make more. I was like, yeah, but if it goes to freaking 70, you're going to be really annoyed. And so then he decided, all right, it's time to take some profits. But this going down will make my dad very happy, even though I don't necessarily want people to lose money on this. Your dad sounds so Indian. Dude, I'm like, bro, my dad cares. Like, my dad is one of those Indian fathers that, like, you know, he's very money-minded in a nitty-gritty way. And I'm like, Dad, you're up 2,000 for doing nothing. How are you not taking the money and running? Like S&P now down 1.3. All right, S&P just lost 623. 623.50. Now it's at 623.33. That's a new low of the day on the S&P. And he was like, but it can go higher. I'm like, yeah, but it could go lower. Like, it's not some game where it just goes higher. I know it feels like that, but like, and he doesn't even know what Figma does. I was like, Dad, it's like this, they're like 1/3 the market cap of Adobe, and Adobe does like 50 billion in free cash flow. Figma does like 200 million. Like, this is just, it's like, I was trying to get him to realize this is a lot of hype. It's a great company, but a lot of freaking hype on this. And maybe it doesn't deserve necessarily as much hype, but Figma right here, 122. All right, so S&P getting a little bit of a new low. The Qs are probably getting a new low as well. Yup, Qs 556. We were at 570 at one point. He sold at 135. He sold at 135. Novo, is Novo pumping? Novo, a little bit of a green move on Novo, 48. The market might be looking to the most undervalued opportunities, even if they're not the best narratives. And Novo and UNH, I mean, you can't deny they're undervalued, even if the narratives are not the best. So that could be getting a little bit of a bid. Wingstop, they had a good earnings. They're flat. Visa's down 1%. Starbucks down 2%. VIX is spiking. Let me check the VIX. I think it's up like 2%. Never mind. That's a little bit too low. It's up 13% today. It's up $2, but 13%. So VIX right here, just below 19, 1892. That could be creating some pain as well. What is a great dip to buy now? You know, a great dip to buy is always a position that you genuinely either want to get into for the first time, which is where the dip gives you the opportunity, or you want to double down on a position. So the reason why I bought Grab yesterday is because I've been buying at 520 for the past month. I'm like, hey, if I can get it at
below 490, which I bought yesterday, then I'm happy about that. So that's a great dip to me. Amazon, I don't have an Amazon position. I don't know if this is a great dip, but down 6% is not easy to get on Amazon. So, could it go down further? Of course, but like that, if I really wanted Amazon taking a little bit, if I want to buy 50 shares, buying 5 shares today, just like begin the process of DCAing, I don't think it's crazy. But then it's a question of, which one actually piques your interest in terms of the stocks that are presenting the best opportunities. Wow. S&P down 1.5. 1.5. My goodness, dude. They really took it down. They just got rid of 50% of the move that we made, we were up 2.5%. They got rid of 1.5, more than 50% of the move in July. They just took it away, which to me feels a bit too aggressive. Now, granted, the payroll revisions we got were also a bit too aggressive, so I can understand. But still, that's a lot. That doesn't take away Microsoft or Meta earnings at all. Where's Googs? Googs is 188. That's down 1.6. Yeah, fear and greed is at, okay, if you were looking for a buy argument, we're not below greed yet, but we are definitely below extreme greed. We were at 78 last week. Now we're at 59 on fear and greed. So, one of the things we've been touting about this market is resiliency, right? And resiliency has been very, very strong. Question is, now, when we get into seasonal weakness, how resilient is this market? Are we headed for 6,000 on the S&P? Are we able to hold 6,250? Like, where is the resiliency in this market? And we need some more data. We need at least a couple weeks to see, but this is the first big test for the market. Moody's, nothing burger. Bond auction, nothing burger. All this tariff nonsense. At the end of the day, Trump's going to taco. It's a nothing burger. Like, earnings have been amazing. So what the big test for this market now is, hey, we just got the worst payroll revision that we've seen, it seems like, in the past couple of years. And we barely added any jobs to the U.S. economy over the past 3 months, which eventually will impact U.S. GDP growth going into Q3. How does the market react? That is the question. That is the question today. Palantir down 4%, 152 on Palantir. Palantir down 4%. Now, again, remember, Palantir, already very expensive, right? So when you have high beta getting hit and you have the macro getting hit, Palantir is probably going to get a hit. But the fact that Palantir is even holding these levels, to me, even if it goes to 140, again, Palantir's market cap very up there. So as long as they have a good earnings and we can sustain these levels, if not expand it, which in this market we might not be able to expand because of macro, that to me is what I care about on Palantir. So that one right there down about 4%. Wow, UNH, they took it down another 2%. 245 on UNH. 245. This must be good for rate cut odds in September. Yes, it is really good. Rate cuts have already driven a probability of 75% or 67% in September, which is up from 40% yesterday. But it's not good for the underlying economy. And this is why Waller and Bowman and all these people were saying it's time to cut. Waller's exact argument in the letter that he wrote on Bloomberg 2 weeks ago was the labor market is not as good as what people think. What was every question Jay Powell got at the FOMC meeting on Wednesday? Hey, the labor market's strong. Why do we need to cut? And Jay Powell doubled down and said, yeah, the labor market's strong. I don't think we need to cut. Imagine Jay Powell had this data of revisions before the FOMC meeting. Like, what would he have said? He definitely wouldn't have said the labor market's strong. Adding less than 20,000 jobs a month is not a strong labor market. And so it's very scary that in the most technologically advanced economy in the world, we cannot measure the amount of jobs we add accurately. Like, it is weird. And unfortunately, it led to the rest of the Fed deciding, outside of Bowman and Waller, that we shouldn't cut. And I think everyone can agree we probably should have cut. Robinhood right here down 9%. Grab down another 2.5. Tesla down 1.6. Tesla may be getting below 300. Cloudflare, they had a good earnings. That's down 5. Bitmine's down 7. Bitcoin's at 114. I haven't looked at Bitcoin all day. Oh my gosh, where's Ethereum? I'm going to guess 3,500. Ethereum 36. All right, so that's holding up a little bit. And the S&P is down 1.6. It's about to give away all the gains we got in July. I don't think we're going to get an emergency rate cut, because I think Powell has too much of an ego and he's not going to want to cut immediately. I also don't know if we definitely need an emergency rate cut, but in September, look, the way for Powell to remedy this in September, very easy. Ready? 50 bips. Deja vu. Deja freaking vu from 2024. Give us 50 bips. First rate cut, give us 50. Because at this point, you got to make up for it, right? You got to somewhat make up for it. So, and again, we don't have conclusive data that the economy is weak. Retail sales, consumer expenditure, all this stuff is good, right? But the labor market stuff today is brand new data. We took away 250,000 jobs that we thought we added. 50 bips. Maybe that's how Powell remedies some of the pain based on not cutting in September or not cutting in July. Because when you lose that many jobs, and potentially we're on track to lose more jobs going into the next couple months, if the labor market continues to be weak, you got to cut. You got to cut aggressively. They're always too late. Yeah, I mean, dude, the sad thing is in 2021, we got into this mess because they were too late. And the one thing Trump has been right about is that, hey, don't repeat this stuff again. Like you guys messed up in 2021. We somehow had the miracle of AI enter into the economy to be able to rebound from 2022 because we didn't cut any rates in 2023. So we needed some type of momentum. The S-curve of growth was AI. And now it's like, if we don't have some magic S-curve that comes in outside of earnings, then you're going to need to cut rates. And if you're too late, the economy is going to be the economy, and it's not going to be pretty. Carvana right here down 5%. They also had a good earnings. AppLovin, they were up 9% yesterday. They're down 5%. And then Bitcoin just below 115. Just below 115. Unemployment is still low. That is true. We're still at only 4.2%. That is fair. So it's not like unemployment is exploding. It's just, again, the Fed is supposed to be forward-looking and prep for this stuff. Remember, a rate cut doesn't even affect the economy for 6 to 12 months. Like, it takes about a year for the rate cut to actually matter and, like, for people to see the impact of it. So, like, this is why you kind of got to cut and then, like, allow the natural cushion of the rate cut to stimulate the economy over time. In COVID, Powell took rates to zero immediately because we didn't have time to wait a year because we had this massive pandemic and we needed the effects immediately. But we have time. The economy is like not horrible. Earnings are good. We have time to let this play out. But if we're going to wait until 2074 to give a rate cut, like, it's not the best idea. Figma, are we tanking on Figs? Figma's tanking. There you go. 113, down 2%, losing 140 and 130. If this one rebounds, I would be very surprised. If this one gets a green candle back to 120-ish, I would be very surprised. AMD, sadly, down 5%. AMD was at 188. Now it's at 167. NVIDIA, is that below 170? NVIDIA holding on to 170 by a thread. SoFi's down 8%. Well, that's better than Hoodie. SoFi below 21. Hoodie's at 92, 94. Okay, Hoodie's down 9%. And you're getting some pain. It sounds too happy about Figma dropping. Dude, I still own my one share of Figma, so I'm losing money on this. I'm just not selling it because there's no point to sell one share and get into the IPO jail that Hood will have you in. Lululemon, is that one dumping? Is that a buy? Roy likes Lululemon. That's down 2%. It's down almost 40% for the year, I think. They had a crappy earnings. Tariffs are affecting them. I don't know enough about this company. Roy said that his daughter really loves Lululemon, and he's kind of using his anecdotal experience to make a little bit of a bet here, down 47% year to date. I have no idea if Lululemon is a buy, but it is down a ton. It is down a ton. Now, again, in the face of all of this, let me just be very clear about what I'm doing with my portfolio. I am not selling anything. If anything, I am just rolling my covered calls. I am not selling anything. I am not trying to make the insinuation that the world is ending and therefore you need to get out of stocks. That is not my argument. My argument is, hey, looks like Jay Powell was a bit too late. And I'm saying that today based on this labor market data revisions that we got. But that does not mean I sell anything. That means that you hold on for the ride. It's a bumpy ride, but you hold on to it. And, over the next few months, I think if we get those rate cuts and earnings continue to be good, then we'll be able to navigate it. Speaking of earnings being good, again, this is another reason why I'm not selling or I have no intention to sell. I mean, take a look at this chart right here by Fundstrat. 96% of the tech companies that have reported so far in the S&P 500 have beat EPS estimates by about 6.7%. So financials, real estate, energy, healthcare, consumer staples, I mean, all of these guys, technology, are beating. All of them across the board are beating to the tune of 70 to 90% of the companies in that category are beating. When you have this type of an earnings beat, unless Q3 is a horrible quarter, like, this is not justifying being scared of this market. Companies have to perform. Companies are performing. And although Amazon's not growing as much as Azure, that's not a reason why Amazon should be down 7%, given that Amazon beat earnings estimates on revenues by $4 billion, and they beat the guide by $3.7 billion. And then they beat EPS by 22%. Meta beat EPS by 27%. I mean, like, these numbers for the scale of these companies are incredible. It's just now the market's going to factor in what to do with the broader economic implications of rate cuts and the obvious seasonal weakness of August. But that is not a reason in any sense of the imagination to sell these companies. S&P 500 still tanking, down 1.69. Down 1.69. Misty is down. So Misty gave a dividend today, $1.18, but they're also down because of MicroStrategy being down. So Misty in general, when they give you the dividend comes out of the net asset value. That's why Misty goes down, but they're also down because of MSTR getting hit. So for those that are in Misty, you'll be getting a dividend payment probably on Monday, but that one's down because of MSTR as well. Palantir right there at 152. Costco, is that green? Costco is green. Yeah, Amazon beat revenue by $5.6 billion, not $4 billion, by $5.6 billion. That's a massive beat. They did 167 versus 162. It's insane, crazy. But, you know, the market is the market. And if they're going to take everything down, they're going to take everything down, even in the face of those earnings beats. Figma goes green again, 118. So it has not hit 120 yet. 120 is the level I want to see it get above to then see if it has any shot to hold it. It's at 118. You got a little bit of a green candlestick right there. But let's see if it can crack 120. That one now at 117. There you go. The market is rigged. Well, when we were all up in July, the market wasn't rigged, right? Now the market's rigged. It is what it is. It's also for those that are new to investing, welcome, right? This is what it's like. This is what it means to be an investor. It's what it means to have your net worth go up and down as much as it does every single month, like, especially in this volatile of a market. And we already went through all the tariff stuff in April. That seems like it was years ago, but like, this is new volatility. And granted, the only reason for this, again, for those that are wondering why are we down so much today, I think it's because of the non-farm payroll revisions. It's not because of like S&P now down 1.7. It's not because like some macro yen carry trade or anything. It's literally just because I think seasonal weakness, and also we got some really ugly revisions, and the market's kind of just like, all right, maybe it's time to take a breather. Now the question is, money managers that missed the August run, I mean, look, they missed NVIDIA at 90, they missed it at 110, 120, 130, 140, 150. It's at 170. It's not at 188 anymore. They saw Microsoft Meta earnings. Microsoft's ready to spend $120 billion next year on CapEx. Do the fund managers come in and say, well, I was waiting for this, I'm finally going to buy? Or do they get greedy and wait for NVIDIA to go to 150? I don't know. If I had to bet, I would say they throw their hat in the ring at these levels versus wait for it to go even lower, because it's just hard to bet that good earnings means a stock will continuously fall, because at some point the earnings justify a certain price and people step in. So if I'm a fund manager, I'm looking at a day like this and saying, hey, maybe this is the day I can make my clients some real money towards the end of the year and justify the management fees I charge if I miss the entire rally during the year. VIX is up 4 points to 2077. Yeah, that's up. That's at a nearly 6-week high. That is correct. We haven't had the VIX up in the past 6 weeks as much. Excluding COVID-19, May, June, July 2025 is the weakest 3-month non-farm payroll growth since 2010, verified with Grok and ChatGPT. I kind of believe that because, dude, look at the numbers. We did 70,000, 14, and 19. So about 100,000 jobs in the past 3 months. I mean, just like from all the data I've personally looked at for the past couple of years, that feels like the weakest 3-month stretch we've had in a while. I mean, every month we've been adding 100,000, 80,000, 140,000. Past 2 months, that was fake. But over the past year, if that all wasn't fake, then it does feel like the past 3 months was very weak. And that's why the market is getting hit like this. I think we have some more data coming out in 4 minutes as well. Do we have PMI today? At 10 a.m. we have, oh, wow. We have consumer sentiment. We have PMI. We have manufacturing. We have consumer expectations. We got a lot of stuff, folks, in 4 minutes. In 4 minutes, we are going to get a lot of data. and we're going to see what happens. Bought more grab at 474. I don't hate it. I bought at 488 yesterday. S&P is not at levels we haven't seen since 2 weeks ago. Yeah, I mean, the S&P, although it's tanking today, it's not like, April types of lows on the S&P. So the question is, does this hold or are we headed lower? And how much does the market think a discount of two? I mean, we basically, again, we're losing a decent amount of what we got in July. 2 weeks ago, that's when we really started moving in July. 2 weeks of gains wiped out. Is just holding that good enough for August versus going lower? And quite frankly, if you ask me, I would say holding this level is good enough for August, because going lower would suck unless you really want to buy the dip. So even if we can hold 620, I don't think it's the worst thing in the world. Yeah, one can make an argument, as Matt says in the chat, it's a healthy red. One can make the argument it's a healthy red. It's a healthy red. My average price on grab is 534 on the shares. On the options, it's 450. So I have two sets of positions. On options, it's 450 as my average, which is not literally the option average, but that's like the time I bought the option. And then the shares are 530. Coinbase also said they're getting into tokenized stocks yesterday. So that's one thing that Coinbase is getting into as well. It's going to be very competitive with all the major exchanges getting into tokenizing everything. Tesla right here, just above 300. It's 50 cents away, folks. It did not give up 300 after the earnings. So maybe this is when it potentially gives up 300. It held strong at 300.40 on the earnings. Tesla 370 right here. Every time I buy Tesla, it goes down. It is what it is. It is. That means you can control when you get your dip then, Rob. You can every time you buy, you know that you could get a little bit more of a dip. Oh, 1 cent away. There she is. There she goes. Below 300. Below 300. Down she goes. Down she goes. Beautiful. Beautiful, beautiful art to see this much red at once across the market. There you go. Tesla 300, S&P 621.48. S&P's holding at 621. As soon as it gives up that, then we're probably headed lower, but it's holding it. Robinhood at least holding 94, and SoFi down 7.6. Stairs up, elevator down. That is correct. Stairs up, elevator down. And again, dude, like if you're not a hedge fund manager, like you have to deal with this. This is like the entry to joining the market. There are some people, S&P gives up 621. Wow. S&P gives up 621. We just hit 620.7, now down. We are on track for a 2% day. We're on track for a 2% day. If you're not actively using derivatives to hedge and manage your position and time the market when you want to buy and sell, and nothing's wrong with that, by the way. If you're good at doing that and you just have more experience, you have more time on your hands, that's fine. But for the majority of people that just don't do that, you have to deal with the volatility. There's literally no pain, no gains without any pain. And today is part of the pain cycle. Wow, 620.30, 30 cents away from losing 620s. And then we actually give up the majority of what we got for July. All right, here we go. 10 a.m. We got a lot of data. Some of that data is probably bad, which is why the S&P just gave up 621. ISM manufacturing PMI 48 versus 49.5 expected. That's a miss. Employment 43.4. Last time we had 45.3. That is a sequential decline. Consumer sentiment 61.7 versus 62. That's a miss. Slight miss, but that's a miss. Construction spending month over month. That's down 0.4%. The street thought it would be flat at 0.0. That is a miss, but that's also likely because of the housing market being frozen, which is why construction spending is going down month over month. ISM manufacturing new orders 47.1, down from 47.2. Basically in line. ISM 64.8 versus 70. That's a miss. Michigan 5-year inflation expectations 3.4 versus 3.6. That's a beat. Consumer expectations final 57.7 versus 58.6. That's a beat. That's good. Current conditions on consumer 68 versus 66. That's a beat. And then inflation expectation, not 5 years, but in 1 year, 4.5 versus 4.4. That is a miss. I hope we don't have 4.5% inflation in a year, but nonetheless, that is what consumers are telling in the Michigan consumer sentiment data. Let's get a little bit more coverage from it.
Construction spending. ISM on the manufacturing side, The headline number comes in light at 48.0. That means it's the 5th consecutive number in contraction territory, and that would comp to, well, 48.0. You have to go back to October of last year to find a lower number. Prices paid moving down, but that's a good thing. 64.8, that'd be the lowest since February at 62.4. Good news there on new orders. 47.1, definitely light. 47.1 would be the lightest, well, just since last month, because the number has been now the 5th consecutive month also under 50. Employment, kind of late after today's number. Employment comes in at 43.4, so it was kind of correct. It's well below 45 in the rearview mirror, well below expectations. Now, let's look at what's going on with University of Michigan sentiment, shall we? If we look at the headline number, this is a final read, so we go from 61.8 to 61.7, no big change. If you look at current conditions, here's a big change from 66.8 to 68.0. That'd be the second best reading of the year outside of January at 75 and change. If we look at what's going on the expectation side, 58.6 now jumps up to 57.7. That's a solid number, and it's still well below the 58.6, but it's, 57.7 is on the light side, of course, and that would be the weakest level just since March. Finally, inflation, maybe the most important aspect of the University of Michigan. 4.4 becomes 4.5 on the 1 year, and there's a 2/10 drop on the 5 to 10 year from 3.6 to 3.4. That would.
All right, the market doesn't like it. Obviously, the market doesn't like it like right here. Reddit's somehow holding 14%, folks. I mean, Reddit earnings must have been just that damn good. S&P down 1.8. Down 1.8. Yeah, I mean, most of those numbers are a miss, and the ISM is the lowest in 9 months. So obviously that is consistent with the labor market data we got today. Again, for those that are just joining, the labor market data was not pretty. The revisions were pretty aggressive. And as a result, that is why, along with some of this ISM data we just got, it shows, at least from today's data, a pretty weak economy from a labor market perspective. And that is why the market's just pricing that in and deciding to sell off equities as a result of that. S&P 500, 621. Now, there's a lot of conflicting data with some of the data we saw today around earnings and productivity and all this other stuff. So I think the market's now in a, hey, how do we reconcile this type of stuff? And that doesn't happen in one day. That happens over weeks. So we're going to have to see how the market thinks of it. Bitcoin below 114, or it touched below 114. Now it's right above it, 114,270. But we did get to 113.90 just a minute ago. There you go. Bitcoin at 114. ELF's at 115. That's down 4. Apple's down. Tessie just above 300. Palantir 152. AMD down 5%. And then SoFi down 8. Google 188. Grab down another 3%. Reddit holding on 14%. Where is the Figma? The Figma did not get above 120, but it's at 117. But it's at 117. All right. This is the pain. This is the pain that we have to deal with. Again, rate cut probabilities are now, wow, it was 67% in the morning. Rate cut probabilities. It is time for J-Pow to do his thing. The market's telling him 81%. 81%. There's your probabilities. All right, we'll get our cut. We will get our cut. It's just going to be a bit annoying to get it under these conditions, but we're going to get our cut. Wow, 81%. The market was like, yeah, it's time. It is time. Remember, July probability was 2%. So you got a fundamental turnaround right here. NVIDIA's still holding 170. Robinhood's still holding basically 95. And Palantir's still holding 153. So in the face of all this red, you do have some stocks that are holding up. UNH just like, it looks like the bottom's falling out on UNH. It looks like the bottom is falling out. 243.90 on this bad boy. From a TA perspective, some of the charts I was looking at yesterday on Twitter, people were saying 229 is the next, main level to look out for. But this is pretty ugly. It's Pretty ugly. He should do an emergency cut. The problem with the emergency cut is like, it has to be during an emergency. And although I would say this labor market revision is definitely alarming, an emergency rate cut could be even more alarming to the stock market in terms of, hey, how bad are things for the Fed to be doing an emergency rate cut? The easiest way to resolve this is to just do 50 bips in September. That's it. 50 bips easily, and not easily, but it perceptually makes up for being late in July. Now, J-Powell's going to take a lot of shit for doing 50. As soon as he does 50, Trump's going to be like, so we could have done 25 and 25, but the guy was so full of himself that now he has to do 50 to make up for it. So he's going to have to deal with that public backlash. And I don't know if he wants to. I would hope he is able to just move on and deal with it and do the right thing, which is 50. But that is one way to at least make up for it. S&P now 30 cents away from giving up 620. 30 cents away from giving up 620. Where is Rocket Lab in the face of all this? Rocket Lab's still holding strong at 42. I mean, I know it's not at 53 anymore, but I also don't think that's the worst thing in the world on Rocket Lab. And then Figma right here at 117. Figma at 117. Netflix is that kind of green. Netflix, again, kind of that recessionary proof stock is what it's touted as, 1171. It's a little green on Netflix. Jamie, thanks for the super chat. Are you making any changes to the UNH call debit spread play with this dip? No, I mean, again, the reason you go long on spreads on UNH is because you want a lot of time. And so December 2027, those spreads at around that 450 level, to me, realistically, in 2.5 years, I think this thing should be back above the 400s. I mean, it's kind of hard to imagine a company of their magnitude with that much free cash flow gets, stays depressed at $240 and trades at this multiple for the next 2-3 years. Now, maybe it's possible. And if it is, that's what happens. But I think, we've been talking about UNH for a while. It's supposed to be a long-term position. It's not supposed to be something that you're supposed to expect to move overnight. And I think that's one of the things, at least on Twitter, a lot of the UNH bulls, I think they got a bit too aggressive in saying this is an immediate turnaround story. And now they saw the earnings. It's not. It's just not, right? So that's why you got to give yourself time. But over the course of years, you would imagine the 15th largest company in the world, because of a DOJ investigation, does not continue to be now the 100th largest company in the world. But over time, we're going to see. Figma right here, 119. UNH still down 2.4. NVIDIA down 2.5. Where's the speculative names? Where's Big Bear? Big Bear. Oof, that's down 4. SoundHound, that's down 4. QBTS, that's down 4. Open Door, for whatever reason, is up 5. DNUT is down 4. Kohl's is down 4. All of them down 4%. Quantum is getting hit today. Yeah, Quantum's getting hit. Rigetti down 4 as well. Rocket Lab down 5. And S&P recovering a little bit. I mean, got 621 again, but that one's still down. UNH doesn't plan to get back on track until 2027, so there's no green in sight until much closer. I mean, look, that's also, the thing about UNH, again, is it also depends on your position size, right? Like, did you take a $10,000 bet or did you take a $200,000 bet? If you took a $10,000 bet as like hey, maybe this can do very well, and it's a very small part of your portfolio, then it is what it is. If you took a multi-$100,000, multi-million-dollar bet, thinking it's the next Meta at 88, maybe, but if it's not, then it's going to be dead money. And there's not much more you can do. NVIDIA right here, down 2%. Lulu down 2.7. Robinhood getting 96 again. And then MicroStrategy, that one, nasty, down 5%. Where's BMNR? BMNR is down 8. Well, they should be looking to buy more Ethereum soon, right? I mean, if Ethereum dips badly, then they should be. Rocket Mortgage is up. So they had a good earnings. So I would expect them to be okay. But also people are fleeing into Rocket Mortgage because of the expectation of rate cuts, which would mean a lot more refinancing, which is SoFi. Dude, SoFi should be up today because if we're definitely getting a rate cut, SoFi is going to get a lot more business on refinancing. So I don't know why that just feels algorithmic for why SoFi is getting hit. SoFi did put out a post yesterday explaining their convertible note or not their convertible note, their dilution, their mixed shelf offering. And Noto talked about it as well. And basically the TLDR of the post is like, hey, this is going to be very good for us strategically. And I think the market overlooked it, which is why SoFi was almost at 24 yesterday. But rate cuts is a tailwind. And that should be overall bullish for SoFi. TMDX, they had a good earnings. I didn't dive deep into the numbers, but they beat on the top and the bottom. They're up 2%. This is a company that transports organs from people into other people. I mean, or transports organs when someone passes away and they need to get organs to someone else who is in need of a surgery for that organ. So it looks like they beat on the top and the bottom, and that one is green as well. Materials Corporation, rare earth minerals, that's up 3.6. USAR was up as well. Trump was talking about rare earth minerals yesterday as well. That's why that is up 5%. And that is green as well. All right, let's get some more coverage on this. Let's get some more coverage and see what people are thinking about this market.
Increases on inflation are one-off. Therefore, we should look through them and try to protect this economy from weakening further, especially Waller. That Governor Waller has been pointing out that there are cracks beneath the surface, and we've been doing that as well in the jobs market. And while the jobs look good on the surface, things are deteriorating. And guess what? The last 2 months, they subtracted 258,000 jobs over the last 2 months.
Is that, in your experience, how
it's a large revision. I mean, look, Gary Cohn was sitting here the other day and saying, don't base everything on the jobs reports because they're always revised and they're hard to fully trust. This is a big revision as far as revisions go, but jobs numbers, NFP always gets revised. So I think there's some merit there to not being able to trust it. The bottom line is the last 3-month average looks a lot different than we thought it did, and strengthens the case for the Fed to cut in September. So we go now to 70% odds in the market from below 50, which is where, I mean, this is really going to be a test of Powell if he wants to see whether inflation is coming, because now we're starting to see the cracks in the labor market. And that's not even getting into some of these new tariff rates that we've got.
And we assume he doesn't know the number on Wednesday, right?
Right.
He doesn't know that.
I know he doesn't know that.
Just want to make sure.
So. He would have been more dovish.
Potentially,
Maybe,
right?
yeah.
I mean, you pointed out his hawkish comments, in particular, sort of seeing through to the potential still for on the other side of inflation and where the economy is. He seems to have a different view of this economy.
Some of these Fed economists are more worried about the economy, and some of them are more worried about inflation. More of them have been more worried about inflation, including the Fed chair. And look, there's a case for that. I mean, you heard Kramer backing the Fed chair yesterday here on the show, because we are starting to see some of the impact of the tariffs. And guess what? After last night's announcement, I mean, we have higher tariff rates. Yeah. You can look at the top 5 trading partners, and even though we made deals with all of them, we're still looking at tariff rates of 15%. China's at 30%. That's one of the biggest trading partner. Japan's at 15%. Korea. I mean, these are.
And now Canada goes up to 35%.
35 ex-US MCA.
Which is important.
So that is
Clearly,
important. So the automakers are okay with that. But how about these new tariff rates set to take effect on Thursday? Laos, Switzerland. I mean, the 2 big ones that are in our top 20 trading partners are Switzerland and Taiwan. Taiwan goes to 20%. They're like a top 5 trading partner for us, you know, because of all the chips.
Well, TSMC is a large part of that. And a lot of
100%.
other electronic things as well.
I mean, look at some of these numbers. They're not huge trading partners, but they are seeing very high rates.
Laos is not buying a lot of U.S. goods.
No, but we buy from Switzerland Rolexes and chocolates and watches. I mean, pharmaceuticals. I think that we wait into half of Switzerland's imports into the United States are pharma, and that we wait for the 232 tariffs to find out the rate
there. And then
there.
on India, the 25% rate, we've talked often, of course, and we'll talk about Apple a bit more as well, given the earnings from last night, but they moved a lot of their production for the U.S. market to India for the express purpose of avoiding tariffs.
Yeah, so this doesn't bode well for them either, unless India can come up with some sort of a deal, but 25% on India is painful. If you add it all up, David, I think what the market is telling you is that it's going to be increasingly difficult for the Fed to stay pat. I mean, this is ironically, you know, even though you might say, oh, President Trump might not want to see this kind of jobs number because it's weak, but actually it totally proves his point that the Fed chair might be too late in lowering interest rates to protect the jobs economy.
Yeah.
I'm not saying that that's necessarily the case, but that, you know, that's what Wall Street is starting to tell you.
We talk, as I believe we should, perhaps not even enough, about the impact of AI and what that will mean for society. Do we have any sense it may not even be resulting in job losses, but
No.
perhaps companies are not hiring at the same pace. I mean, I don't know when that impact starts to be felt or whether we're even starting to see it now.
No, and we know anecdotally that it's happening, right? And it could be one reason why, for instance, we see it's harder to go out and get a job. People have their jobs. We haven't seen a big increase in layoffs. That's one thing. We look for it in the productivity numbers, right? Because that's really what's set to spike, and that's ultimately good for growth. But I think, supply concerns around immigration, that's also feeding into the picture. Foreign-born workers saw a material drop, and that's probably why the unemployment rate hasn't gone up more.
She's right about that. I mean, that logic is exactly why the unemployment rate has not gone up more, but it is one of the reasons we've seen a revision. It's going to take time for that to affect the unemployment rate, which is why, the people that are saying we don't need to cut maybe can point to that one statistic as a reason to not cut. But it is not a reason to say that the labor market is super strong. And I think that's part of the pain that we have going on right now. Bitmine right here down 9.3%. Down 9.3%. We do have some green candles popping up. Netflix, a little green. UNH, a little green. Figma back above 120. I mean, you got to give it to Figma from 110 to 123. If it can get back above that, maybe that's the floor. The 130s would be very impressive if it can get back above that. But that one also going green. And then hoodie right here at 97. Again, my biggest issue today is nothing to do with the red. I really don't care about the red. The red is inevitable. And as you become more of a mature investor, you see things go up and down. It is what it is. What I'm annoyed by is the fact that in the most technologically advanced economy in history, the United States of America, we can't accurately count the jobs that we add as an economy per month. I don't get it. I really don't get it, because if Jay Powell had seen these revisions for 45 minutes during the FOMC meeting, he would have not have said the labor market's strong. He would have said, nope, labor market's showing some weakness. And he said the labor market was very strong for 45 minutes. And you kind of can't blame him, because the data that he's looking at is saying, hey, the non-farm payrolls are great. In reality, they're horrible. They're horrible. But we didn't have the data to find that out. I mean, Arnie says, what the Figma? Yeah, what the Figma, bro? Like, what is this? Sounds like the Fed needs to call Palantir. I remember saying this back at late 2023 when we were getting these stupid revisions. I was just like, why is Palantir not the operating system to aggregate all the data that's necessary? I'm sure coming from a lot of siloed places. And then you don't have to be 100% accurate, but like 5 to 10% margin, even 20% margin of safety is acceptable. These guys are off by 85%. This is not reasonable. Is it too much to ask as an American citizen that my tax dollars actually go to funding the right way to figure out how many jobs the country is adding? Like, is that crazy? And that's the issue here. It's very weird. And it makes you wonder, why is this stuff not fixed? Like, is it really that hard to count the amount of jobs we have? Am I just not getting how unbelievably complicated it is to count the number of jobs we added per month? I mean, it's tough. Sachin says it's political. It's used for political purposes. Well, I didn't want to say it, but that's it. That's kind of what I'm, implying here, is like there has to be another reason for why we're not getting the accuracy of the jobs. You might have politicians having a fundamentally different way of wanting the data to be consumed. But it is sad, dude. It is sad. It's hard for me to believe that you got Elon getting rockets up into space in a reusable fashion, and we cannot count the amount of jobs that we're adding in an economy. And it's Democrats and Republicans, right? Because they both want to take credit for a lot of jobs, which means they have to show a lot of jobs. But if there's not a lot of jobs, they might want to cook the books, and that's why we have to see what we're seeing. Now, we are getting a little bit of a V-shape right here, 622.84 on the S&P. That's only down 1.4. It was down 1.8. NVIDIA back to 175. You're seeing a bit of a V-shape across the board. Palantir as well, back to 155. And then SoFi almost back to 22. Is it a dead cat? What do you guys think? Let's see poll. Is it a cat that is dead, or are there actually 8 lives? Dead cat? Yes or no? What do we think? I don't even know if this qualifies as a dead cat yet. I feel like it's got to go up at least another 0.5% to be a real. Well, actually, Hood 93 to 97. I mean, that is almost 98. I mean, that is quite a little bit of a bounce right there. It's not the worst dump. I'm long grab December 2027 calls. I have $7 strikes on those. So those are not covered calls. I would not sell a covered call for grab December 2027. I think that's I think grab will be above 7 in 2 years. So I would not sell that call, but I am long those calls. How many asses should be fired in the government for a revision like this? The sad part is no one's going to get fired for it because, again, if it's manufactured the way it's manufactured, I mean, it's just weird, bro. It's very, very weird that we are not accurately counting this type of data. UNH still down. So UNH is the one that's not recovering. We got a lot of green candles. UNH continues to go down, 241.50. 1030 pump. Yeah, 1030 pump today. 1030 pump. Open door is still green as well. There you go. Again, this is why it's hard to sell. Imagine you sold Hood in 93. Now, maybe Hood gets to 93 again tomorrow, or not tomorrow. Tomorrow's Saturday, like Monday, right? But like, I just don't think you sell when the market is as strong as it is from a earnings perspective. And we just saw Hood earnings, because the earnings ultimately are what these companies are judged on. But that doesn't mean that the market's not going to take a little bit of a breather, given, you know, Hood in particular had such a good past couple of months. Let me look at the stock draft. Let's bring that up today. So today is going to be interesting. Today is the first negative 1% day we've had on the S&P 500 in literally 2 months. So the stock draft today, I'm very curious to see who's holding up. Likely it's the same. The order is Matt, Tanner, Amit, Steve, Kris. If everyone's down, maybe that order stays the same. But here we go. All right. Matt's still up 15. Tanner's up 6. I'm up 5.2. Steve's up 1. Kris is down 4. Okay. So Kris getting hit the worst. Obviously, UNH is hurting that a lot. But Matt right here is up 15. Tanner's up 6. I am very close to Tanner. I am less than 1% away from catching up to Tanner. Duolingo not helping me out. And then Steve is green. Kris is down about 4. So that's what you got on the stock draft. On Apple, yeah, Apple was up a little bit in the morning, but now Apple's getting hit. Bostic, one of the Fed presidents, he's going to be on soon. So that'll be very important to kind of get his take as well and see what he thinks is going on in the market. This is not year to date. We did a stock draft back in June of 2025. So about 2 months ago. It's going to be a 1-year stock draft. It's just something for fun. And by next year, we'll see who wins. But it's not a year to date because it technically didn't start in January. But it was in June. S&P, a little bit of a bounce, 623. 623. Yeah, Matt should have 1 million followers and a $500 a month Discord, given he's up 15% right here. Amazon, is that one still tanking? Amazon recovering a little bit. It was down 8. Now it's down 6. Cloudflare goes green. That one was down 5. So that's a nice little 5% reversal. Almost green, 206.93. I mean, you can't deny there is a bit of a V-shape here. 55% of you say it's a dead cat bounce. I have not been buying more Duolingo. I don't actually own it. It's just in like a fantasy ETF. So Duolingo down 3% right here. I don't actually own it personally, but it's in my ETF. Look at how they gather the data for jobless claims. It's atrocious. Yeah, I don't know all the ways they do, but some of the stories I've heard it's pretty ridiculous, bro. Some of the ways they gather this data is pretty ridiculous. Now, one thing that's interesting is part of the jobs that got lost potentially are a lot of restaurant jobs and, jobs where immigrants might not be showing up for work because of the fear of ICE and deportations. And so that stuff maybe could be contributing to why the revision, because, the restaurants might not be reporting that they are firing these people because they're not firing them. They're just, waiting to see what the immigration landscape is going to play out to be. And so maybe that is one area of why we had such a heavy revision. Robinhood back to 98. it could be rooted in illegal immigration, but a lot of it I also think is rooted in just incompetency when it comes to manufacturing and understanding the data. Amit, my wife said she's leaving me if Grab doesn't go to 6 by end of year. Should I be worried? Well, you know, at least you're in a situation where your wife is not telling you to sell Palantir. I had a guy message me. I'm not going to say his name, but if he's watching, he knows who he is. He messaged me on Twitter and he said, Amit, I love Palantir. I've been in since $20, but my wife just forced me to sell because of the work they do with ICE. And he was like, I really tried to fight it. Like I really tried, but I just couldn't fight it, dude. I had to sell. And the day I think he sold at like 147 or something. He texted me, he DM'd me on Twitter. He's like, yeah, I just sold. So at least you're not in that situation where the wifey's making you sleep on the couch if you don't sell your Palantir. Sometimes that's how it goes. Look, if I was in that situation, Robinhood making a move right here, 98.21, I would make sure that I don't have a wife that is not, able to understand exactly what Palantir is doing with ICE, because if you assume exactly what the media says, then it is what it is, right? Like I would try to make sure you're educated about that. B, I mean, I don't want my wife making my investment decisions. I'm gonna make mine. If I lose money, I lose money. If I make money, I make money. But I'm happy to talk about it with you if you want to know my thesis on Grab, if you're my wife. But I'm happy to listen to your bear case. I'm happy to have a discussion. Figma's about to go to 130. My goodness. But if you tell me, Grab's an evil company or something, so sell it. I'm like, well, no, like that's not how it works. So, dude, Figma's really about to get to 130. Really about to get to 130. Yeah, only one Palantir. You can always find another wife, You could always find another wife, dude. It's real though, dude. Some people have a negative visceral reaction as soon as they hear Palantir because of what they've heard in the media. And unfortunately, it can hurt a relationship. And I would just make sure to not get into a relationship if someone is that obsessed with the Vice media headline. Like if that's really the way that you're consuming content, like I'm gonna have to be very intentional with the person that I date or end up marrying, because my political beliefs have changed dramatically over the past 10 years. And there's a lot of things I care about. There's a lot of things I really don't care about. And if you care about a lot of these things and make me try to care about them, and I just genuinely don't care about them, like I'm sorry, I have other things I care about. And now I'm a bad person because I don't care about this stuff, or because I'm not reacting to some headline, or because I'm investing in a certain way. Like that relationship's not going to work. It's just not going to work. So yeah, Amit's husband will have to. Yeah, first question on the date. So what do you think about Palantir? Amit's future wife, I'm forcing you to sell your grinder. See, this is why you guys are the best chat on YouTube. And this is why I almost closed my screen yesterday, because with Devin Ryan, I almost burst out laughing. I have to go back to the chat just to see some of the comments you guys had, because I don't remember them, but I know they were funny. I know they were really funny. Oh, you got Saylor. He was on CNBC this morning. Let's see Mr. Saylor justify Bitcoin and MSTR strategy to continue buying Bitcoin. We will see if we can get Bostic from the Fed on in a little bit as well, and see what he has to say about some of these job numbers.
And then issue digital credit like preferred stocks against that digital capital in order to strip the volatility and the risk off of the Bitcoin and provide yield to investors. And
the latest preferred stock offering, it was going to be $500 million, and why not do $2.5 billion? It's 5 times as much because of demand.
My first IPO was $48 million in 1998. This year we did 4 IPOs for a total of about the first was $500 million, $500 million, $1 billion, and this is the largest IPO of the year, $2.5 billion.
Like the tie, do you have? Are they all orange now? Mostly.
We only wear orange ties.
You only wear orange ties, because I went to DC and didn't think about it and wore an orange tie. Every single person thought I was like advertising Bitcoin, and on. I had a picture that I put out on Twitter. I'm supposedly a holder.
Okay, we give you like the 80% of the upside, and we give you 20% in a structured dividend, and then we give you principal protection. That's for people that would prefer to invest in hedge funds or S&P indexes.
But you're using the proceeds to buy more Bitcoin. You just keep adding on to how much Bitcoin you have, and your average price is what, 73,000.
Yeah, we'll sell a credit instrument like Strike, and we'll buy Bitcoin. So we're taking the volatility and the duration and the upside for our equity investors, and we're giving a structured instrument to the credit investors. Now, Stretch, which is our latest IPO, and I think the most exciting product, it's like treasury Bitcoin. It's for someone that wants monthly dividend, they want principal protection, they want the lowest volatility, they want a high yield savings account, and it kind of competes with money markets or with treasuries. And so what the company has done is we're taking this pure digital capital asset that's got a lot of performance but a lot of volatility, and we're refining it into securities that conventional investors can buy depending upon their risk tolerance and their duration interest.
Is there ever too much Bitcoin for you to own? Like if you could own all of it?
I don't think we'll get all of it. I don't think
Again, the preferred equities that Saylor is putting out, the reason the credit markets love it is because it's a guaranteed 9% yield. And they're shorting MSTR at the same time. So they're hedging their bets. But that is why there's so much damn demand for these products. There's not many preferred equities that are out there that can give you 9%, right? That's double money market funds. So from that perspective, that is why he's able to raise this much money and then take that money and buy more Bitcoin.
the range of 3 to 5 or 3 to 7% is too much. BlackRock has got more
I
than
just
us.
wonder. I was thinking about the mental exercise of if you could actually own all of it, like if you would even, bless you, if you would want it.
Well, you know, we started and we had very little, and Bitcoin was 10,000, and now Bitcoin's more than 100,000, and 97% of the Bitcoin is worth 10 times as much, and somebody else, not us, has it.
Right.
So it's a practical matter. What we're doing is we're monetizing and powering up this.
I totally get it. I
digital
just mean, if
world.
you owned all of it, would that change the entire behavior?
We don't.
of Bitcoin?
Yeah, we wouldn't want to own all of it.
wouldn't wanna
We
own
want everybody else to have their
totally
piece.
too.
The nice thing there is there's 160 companies that are capitalizing on Bitcoin in the public market, up from about 60 last year. So the Bitcoin treasury movement's exploding, and companies like MetaPlanet in Japan and Capital B in France and Smarter Web in the UK, and then there's a raft of them in the US, Anthony Pompliano's company, you know, and 21, they're all capitalizing. The big idea is I take digital capital, I issue digital credit, and a digital credit instrument can either be longer duration or it can be higher performance. We're offering 9% dividend yield with Stretch. The average money market's 4.2% dividend yield. No one would ever want to give a 9% perpetual yield in a bond that's backed by real estate or backed by gold or backed by any conventional fiat asset. But we're investing in Bitcoin, and my 20-year forecast for Bitcoin is 30% a year ARR. So it's easy for us.
Sort of a philosophical question about treasuries, actually. And I don't know how much you believe in US dollars these days, but the question is, if you believe that corporations, if you believe one day Warren Buffett, instead of holding
Well, maybe not Warren Buffett.
What?
Maybe not Warren.
Well, you know, instead of holding $300 billion of treasuries,
Called it rat poison.
he would hold.
60 billion.
It's not going to be Warren Buffett.
He would hold. You know, that all these companies, instead of holding cash or treasuries, they would all hold their money in Bitcoin. If that were true, what would that do to the U.S. government and its ability to operate?
Well, I think the key to keep in mind is Bitcoin is demonetizing foreign real estate, private equity, public equity, other sorts of store of value assets everywhere in the world. 20th century physical analog assets are becoming 21st century digital assets. These companies like Apple and Microsoft, if they could buy the S&P index, they'd be better off. It's against SEC rules.
Right.
If they could buy each other's securities, if the Mag 7 could buy each other's securities, they would be better off. That's against SEC rules. The only security Apple can buy is Apple stock. And what do? They buy their own security. So in general, if you're trying to create shareholder value, you don't want to park it in a fiat currency. You want to park it in a tangible asset. But gold and real estate don't make sense.
Did you ever see, you know, we're talking about
Bitcoin
stable.
I mean, that's Saylor. He consistently finds a way to raise capital, and it is completely taking the stock out of the gutter from the lows of 2020. We are getting some rebounds, folks. Hoodie almost got to 99. Hoodie's at 98.70. No, we got to 99.40, dude. Got to 99.40. That's a big move from 93. That's a really big move. So that one going up, S&P going up, Figma trying to get back to 130. Rocket Lab only down 1. S&P was down 1.8. Now it's down 1.3. So maybe you have the big boys step in, and that was their dip. And potentially they took advantage of it. And they might have bought. Amit, do you have SoFi? Yes, I have SoFi options. If SoFi is above 20 by January, those will do very well, which I think it will. I mean, I'm really not scared at all about those options. I feel like SoFi will be fine. And if they're not fine, it's more so macro. It's not execution, because The company's doing very well on an earnings perspective. AppLovin right here is down 1.7. It was down 5. A lot of high beta recovering. Reddit, it was up 14. Reddit's up 19. I mean, resiliency was the name of the market over the past 5 months. Today is one of the first days the market really got a punch in the gut. And now the question is, we haven't closed up or down 1% in the past 25 days. Do we make it 26? Could we recover another couple bucks on the S&P to not actually go down 1% today? We're going to have to see. Shout out to I'm Ben. I know he's been on Reddit for a while. A bunch of you guys in the chat have loved Reddit, and that one has been, they just smashed earnings. They absolutely smashed earnings. They deserve this pump. So, and the fact that they're holding it in the midst of the sell-off was also really good. So now it's just expanding. But Reddit right here getting some momentum. Randy says, I was down 100K. Now I'm only down 48K. Yeah, I was down 94 at the worst of it today. Now I'm down 48. Exactly, Randy, I'm literally down the exact amount as you, 48. So mine is 49.4 now. But yeah, that's not horrible. I mean, covered almost 50% of it. You guys have the guts to check. You have to check, bro. You have to check. Reddit now 192. You have to see the pain of the red. It builds character. It builds character. Steven says I was down 400. Now I'm down 180. Well, sucks, but it's not as bad as 400. What do you think of Chipotle? I love eating there, but I don't like the stock. They have some tariff issues, CEO decreased demand forecast. So yeah, I think there's a lot of other opportunities in the market besides Chipotle. Why even look for the long term? So here's my thing. I mean, look, it makes sense. Why even look for the long term? But because in the long term, that's what matters. I still think that the ability to deal with the volatility in a way that is humble, in a way that is not becoming a bad person because of it, is a very important life characteristic. Like, there are some people, when the market goes down, become horrible human beings, right? They blame everybody. They get pissed off at people. They curse at the world. Their family suffers because they're down in the portfolio. So, they yell at their significant other or something. And that's just not the right way to do it. And I think in April, we all went through that emotional feeling as well. Even though in April, even if the market tanked 30%, that over the long term, you're not going to be selling, right? So I think to some extent, it's important to see the red and be able to deal with the fact that you're down 50 grand in a day, and that's okay, right? And you don't have to turn into a horrible human being just because you're down, just because your net worth took a hit. You could feel bad about it, but you don't have to be a horrible human being. Because when you're up 50 grand in a day, you also shouldn't become a cocky, arrogant prick that thinks you're the smartest guy in the world. It is the humbling of being down as much as you're up that I think turns you into a real investor. And this is not me saying this. Buffett has said this. Druckenmiller has said this. Bill Ackman has said this. All these guys have been down hundreds of millions, if not billions, and they've also been up billions in a very short period of time. And one of the reasons they are who they are is because they're able to deal with the volatility up or down. So I just think, for all of us as investors, it's still important to navigate the red and the green. And it helps, when you're in a community together. JS, thank you for the 14 super chat. Though red days and green ones, this man always is showing up. He doesn't wear a watch because the time is always now. Cheers, brother. Dude, my mom, she's like, did you really wear a watch with no time on it? She's like, did you really go to the Robinhood thing and wear a watch? And I was like, yeah, mom. It was like, she was just like, you are crazy. Thank you, JS, for the super chat. Appreciate it. Lolo, thank you for the 16 super chat. This is for your first drink at the meetup. Appreciate it. For the meetup, again, I will put the link in the chat. If you have not signed up, you can sign up. I will give you instructions on what to do next after you sign up. But here's the link in the chat. It is going to be in Miami, August 23rd. And you'll get an email probably tomorrow with instructions on how to officially confirm your spot. But you can sign up there. Market psychology has never been more important. Yes. Market psychology has never been more important. And we've all been on a really good run. This is one of the worst days we've had, I would say, literally in 3 months. I mean, the last time it was this bad was April, because the only other times we got close to this was Iran, Israel, that recovered like within hours. Moody's, that recovered within literally hours on the pre-markets on Monday after the Friday downgrade. And then the bond auction intraday on the 20-year, it was 5.1 instead of 5.03. We went down like 1.2%. We recovered by 4 p.m. So it's like we've never really had a day where we had some actual bad macro data like non-farm payrolls, and then, you know, the pain of the markets tanking on it. But maybe we're getting a little bit of a recovery here. All right, folks. Fed President Raphael Bostic, let's get his thoughts on the labor market and see what we got from his perspective on what the Fed should do.
Along with those hefty revisions downward, change your view of the employment market, to change your view of the economy, and your view on the outlook for rates.
First of all, good morning, Steve. It's good to see you and Sarah. It's been a while. Here's what I would say. It's something that is definitely true. The numbers today were significant, and I agree with you that the revisions downward in the previous 2 months were perhaps the bigger story. Look, we've now seen with these revisions a real clear signal that employment markets are slowing down in a significant way. I would say off of pretty solid levels before. So the question that is in my mind is really, to what extent is this a one-time move down that will persist over time? Or is this something that we will see where the labor markets will return back to their basically waiting to see where things are? But going into this week, I thought that the risks to inflation were much greater than the risk to employment. Our inflation rate, our core PCE, was at 2.8. It was not moving toward 2%. All the context we were hearing were saying that price pressures were going up, and labor markets were quite steady. Unemployment was at 4.1%. Wages were solid, and employment growth was solid. The numbers today and the revisions in an important way suggest that maybe the economy and the labor market is weakening more broadly than certainly what we're seeing in the 6th district. But that does also suggest that the risks to the employment side of the mandate are maybe coming more into balance with those in inflation. And that's something that I'll really have to look at as I think about the appropriate path for policy.
Raphael, there's the old song, I wish that I knew what I knew now when I was both younger or older. Had you had this data going into...
What song is that from? Who said that song? Anyone know what song is that from? I've never heard that song before.
The meeting, would you have changed your view and what you ended up doing and supporting?
You know, I don't think so. There is still a lot of strength underlying the labor market. We do see that wages are not collapsing. So wages are operating in a way that we typically see in a solid labor market. The unemployment rate, as many have noted, is still at 4.2%, which is below full employment measures in many metrics. And I still am not hearing from businesses that they're on the verge of letting go a lot of people. So in many regards, the labor market still looks good. Look, even over the 12-month period, the annual job creation rate is still over 100,000 jobs. So in many ways, this is about slowing down. And now the task we have is really to figure out to what extent is this slowdown likely to persist and get us into a more troublesome position. But we don't know that now, and that's something that I'll be working on over the next 2 months.
Raphael, I know it's only a couple hours and change past the number coming out, but we had you penciled in, and I'll underline penciled because you don't make a firm commitment to your forecast. Had you penciled in for just one cut this year? Are you still in that place?
Well, you know, I don't really change those things until I get much closer to the meeting. So for today, yes. I do think that with new information, it's appropriate to rethink everything. And that's what I'll be doing with my team. If it looks like the labor market is weakening in a sustained way, such that the risks on that side have increased to be greater than the risks on the inflation side, then I'd be open to increasing the number of cuts this year. Today, I don't see that right now. Inflation is still further from its target than employment is from its, but we will just have to watch and see how things evolve over the next several months.
But I think one of the questions, President Bostic, is whether you should look through a tariff-induced inflationary spark. And that's what the dissenters, Governor Waller and Governor Bowman, have said, is that, sure, if we see tariff-induced inflation, it's one-off, and we should look through it. It doesn't speak to, necessarily what's happening in terms of demand in the underlying economy where the Fed should react to. Do you disagree with that?
Well, I think that's the textbook story of what tariffs mean and do to an economy. I think the situation today is a bit different in a couple of ways. First, the way that the tariffs have been rolled out has been over an extended period of time, which is not what you see in textbooks. So what we have is tariffs being in the psychology of the consumer for a much more extended period than I think we would typically expect. A second thing, which I think is quite important, but I have not seen talked about very much, is that these tariffs are intended to change supply chains in pretty significant ways. So in that sense, tariffs are intended to create structural changes, and those structural changes should, I would expect, have implications for the dynamics for inflation and other things moving forward. So if these tariffs are successful, then I don't think it will be appropriate to just look through them. Other things will have happened, and we'll have to tease that out to make sure we understand the full implication of that as we make our policies.
So just to follow up on that, I've been thinking about this too, Raphael, which is, you mean potential growth could be lower, which means that you would not be quite so reactive to growth stepping down if you are ultimately ending up in less optimal supply chain configurations.
So these are the things that we'll have to work through, but that is definitely a possibility. And what I want to do is make sure that we understand the full picture of what's happening. And the tariff policies, as you know, are quite complex. Country to country, we have different levels. Businesses are still trying to figure out what their optimal strategies will be in this new environment. And it's going to take 3, 6, maybe even 12 months for them to come up with pricing strategies and sourcing strategies that make sense.
Raphael, one more from me, one more from Sarah. The dissenters said this morning, they talked about this idea of looking at inflation or PCE ex tariffs. Is that a calculation that makes sense to you?
Well, I don't think that's what we're going to do in our building. We've talked about this, and I think what we've come to the conclusion of is, the world is very integrated, and all of these things fit together in a very complex way, and it's very difficult to tease out individual things. So we're not going to go that route, I don't think, but it is an interesting concept.
I just want to push back a little on your view about the labor market and how it's in good shape. I know we got today's numbers, but it really does change. The 3-month average now goes from, I think, 150,000 to 37,000. And even if you look at the consumer, we haven't really seen real spending growth lately. We saw a step down in the GDP number on the consumer. So, why not get ahead of all that?
Look, I think we are in a very difficult environment right now. And if this was just a one-dimensional issue, I think it would be more straightforward. In fact, that's where we've been for much of the last 3 years. Today, we have 2 dimensions that we have to consider, and it's the intersection of those that really drives what makes sense. Today's numbers do raise the salience of risks to the employment side, but we can't just act as if there aren't risks on the other side as well. And our task moving forward will be to try to figure out on net, how should we think about this? Another thing I would say is there's a lot of debate also about how restrictive our policy actually is today. And that's something that I think everyone is going to have to reflect on, because it may be the case that there is a lot of momentum that we are not constraining things as much as people think. I don't have a full view on this, but this is something that we're also going to look at to really understand how much we're contributing to the dynamics that are going on today.
Raphael, thank you for joining us and sitting in the post-jobs report hot seat. Next time, one of us will get on the Delta flight between Atlanta and...
All right, let's bring on someone to get his thoughts on what we got from this labor market data and what Bostic just said. Kris Joins, good morning.
Geez, man, the market is red. What are you gonna do, right? It's just one of those days. I want to address something in your comment section. Some people are like, oh, Kris has horrible picks. I'm like, look, you're looking at things very, very short term. Like, it makes no sense to be that short term. Like, oh, you picked UNH. It's a ball falling knife. Okay, oh, you called Palantir wrong. Okay, but there's plenty of things that I've gotten right that people may or may not be like, I don't want to say give me credit for, but like cruise lines, Wingstop. There's an entire litany of it, and
dude,
no one can bat 100%.
I think when it comes to that stuff, bro, people are going to talk. People are like, it's the same thing. Like, people are going to say what they're going to say. If Grab stays stuck at $4 for the next 2 years, people are going to say it sucks. Like it is what it is.
Yeah.
Kind of just got to balance it out with what's good, what's bad,
Yeah, it's interesting. No, it's just interesting when people just, mouth off in the comment section about it. And it's like, I know I'm feeding the trolls right now, which probably
that is exactly what you're doing. Exactly. And
yeah, probably shouldn't do
it
that.
too.
So I'll let it go. But yeah, it's funny. One of the
before we get into it, I think let's start right here. What is your take on this labor market revision? Because yesterday you said no cuts because the labor market's strong, and you had a point, right? Because the labor market's strong. You looked at the data, labor market's strong. I think you are realizing what all of us are realizing today, along with what JPow's realizing, which is maybe the labor market's not strong. So do you think we need a cut now, or how do you think of it?
I mean, it depends on if we have a stagflationary environment or not, right? I mean, one of the things, if you look at the numbers, you're starting to see a rise in goods inflation. So all the tariff stuff, it's starting to make its way into the inflation numbers. So on one hand, you have job losses. On the other hand, you've got rising inflation. That's like, it's really bad. That means you're getting a stagflationary environment.
Yeah.
So it's kind of like putting yourself in a rock and a hard place at the same time. So not to mention shelters rolling over in some parts of the country as well. So that's another thing. There could be a reverse wealth effect that ends up getting put into the markets.
Do you think that means should JPow cut in September now?
I think so. I think at this point, there's not like the risk of not cutting are probably way more than actually cutting.
Yeah.
I think I'm more concerned that the Trump administration is pursuing these tariffs as like a default thing. That's not the way to do it. I mean, clearly putting tariffs on Laos is not having the greatest impact on the market, right? And not to mention, I think the other countries they know economics 101, which says if you put up trade barriers, right, all you're really doing is you put up tariffs, all you're really doing is taxing your own citizens. You could call it whatever you want. It's taxed by another means. So I don't know. Maybe the Trump administration will, eventually do Liberation Day Part 2, and they kind of like back away from the whole thing. So we'll see what happens. But like I said, this administration, it's every day, it's a new thing, and you never can really put your finger on one exact thing if it's gonna work or not. So
what is your general take on when you woke up this morning and you saw the red before you got the labor market data? Because I was up at Chris. I was up at like 2 a.m. responding to Chris's tweets, and he was like, "Why are you awake?" And the honest answer is because I fell asleep so early last night, so I woke up at like 2 a.m. But what was your reaction in the pre-markets when you saw everything tanking? Like, why do you think it's happening?
I've developed some tunnel vision to UNH, literally, dude. Like I've been ignoring the rest of the market because all my positions are built. They're ready to go. They're not like I've got massive gains in things. And the only question that I have right now is, should I sell some of this stuff and use it to buy into more UNH? And, so I was like, before I go do that, I'm going to check my thesis again. Because, every time you see the red, you want to check your thesis, triple check it, double check it. And then you run all sorts of valuation scenarios to see like, okay, what could this possibly get to in what period of time? Like, what are the options that this company has in order to get back to where they need to go? And I think right now, when it comes to companies that are generating great cash flows, people tend to ignore the reality that when you have really good cash flows, you have a lot of optionality to kind of change the valuation and trajectory of your company. Yeah. I mean, we saw that happen with Meta in 2022, right? Strong cash flows, their expenses got a little bit too high. So Zuck laid some people off, took those cash flows, plowed them into share buybacks. And what did that do? That ended up sending the stock, roaring, because now at the back end, your EPS is gonna climb.
So you're seeing a lot of these tweets. UNH reminds me of Meta in 2022. What is your current take? Is that accurate? Is UNH Meta in 2022?
In my opinion, it is. I mean, okay. So do this if you have Webull on. Pull up your charts for CVS, Humana, and Cigna. So the thing that happened with CVS is that they recognized a lot of what's happening in the Medicare Advantage industry early on. So when they did their bids processing a year ago, they did not focus on trying to win too many members. If you look at Humana did the same thing. Humana lost 500,000 Medicare members, and yet Humana has actually done okay compared to UNH, which has gone straight down. So the key to basically this turnaround is just getting your margins to improve. So right now, everyone is taking the right steps. In UNH, their leadership is transitioning; it's changing to what it needs to be. And I just ran a whole bunch of scenarios. I looked at it. I was like, okay, what are some of the optionalities that they have? One, they generate a tremendous amount of operating cash, right? The benefit is when you're generating so much cash flow, you got to do something with it. Now, UNH in the past has been a serial buyer of other companies that lend to its platform and basically make grow earnings. The problem is they've gotten too big, and some people are saying that United Health is too big for any more acquisitions. I mean, the Justice Department is going after them for this Amedisys, which is, I think, a $3 or $4 billion transaction. So UNH does not get to buy companies right now, even though it has strong cash flows. So what do you think they're going to do with that cash? They have a AAA. They have what is that thing called? Like an investment grade balance sheet. They've got 32 billion sitting in cash. They're worth like what, 220 billion market cap right now.
They're gonna buy back their stock. Yeah,
they're gonna buy it back. And the old CEO did the exact thing in 2007 and 2008. It's like you could see it repeating itself again.
By the way, the CEO who bought at the open market on May 16th, he's down 3 million.
Yeah.
So
and his entire pay package rests on, if you open it up, it rests on a strike price on, because he has options on this thing, on a strike of $300 a share. Okay.
But okay, so when you say it's meta, so here the context on this is really important for those that are newer to investing and weren't there in 2022. Meta went from, I think, $350 trillion market cap 2021 to 88 was the bottom in 2022. Mm-hmm. Meta, 4 billion daily active users. Zuckerberg's a killer. I mean, it's one of the most important companies on the planet. There was no reason it should have been trading at an 8 PE, but the people who bought, like Kris did buy some spreads on Meta at that time, had to look through all the noise. Are you saying people should really look through all the noise on UNH to get that type of asymmetric opportunity? Or are you still worried that there's a shot it's not as asymmetric as you think?
No, people just need to do research on the industry. Like, if you understand how the insurance industry works, you'll get it. It's not nearly as complicated. So whenever you see these short-term moves, whenever you see this move down, everyone's like, oh my God, this company is dead. And it's like, no, they just did bad forecasting. And the thing is, they've got a lot of bad headlines on top of it. So that did not help. So they've got probably 3 or 4 key issues in the for UNH. And if you just look at below the surface, all of them were addressed on the earnings call. Now, clearly, the company sandbagged the shit out of their numbers. I'll give you all the stuff that they sandbagged. Okay. So the first thing that they did was, and this was the most obvious, they took $1.6 billion of receivables and they just said, we're never going to receive these. We'll just recognize them. Okay. So right there, usually with companies, when it comes to like receivables and you can't get your money, you do it very slowly, right, over time. They just kind of took a bunch of years receivables that haven't been paid and said, okay, fuck it, we're gonna write this number down. So first, your earnings for the rest of the year took a 1.6 billion immediate downward move, but it's a non-cash thing. It's not cash flow. It's not like they took $1.6 billion and they burned it, right? They just took 1.6 billion in receivables, recognize that they're unreceivable. And so that's not. Now, one of the benefits to that is that you just lowered your net income. If you lower your net income, what can you do with lower net income? You don't pay taxes on it. So automatically you're gaining on 1.6, you're getting almost like 200-300 million dollars of tax savings, right? So that's one thing that they did. So number one, they sandbagged that's one part of it. Another thing that they've been accused of, and they did do this, by the way, in 2024, the growth was starting to kind of like slow down. So one of the things that they did is I just said they were serial buyer of companies, right? So they had bought a bunch of companies very early on, and they sold them to private equity. And when they sold them to private equity, they generated a net profit, right? So you remember how like Google sold, I think, something, and they generated like a net profit from it.
Yep.
Right. And it's like, oh my God, look, you're getting cash. So now it goes into your earnings. Well, that whole Fugazi thing where you're basically recognizing the sale on things. So in their original projections, they were projected to do about $1 billion of that, right? So you were going to recognize $1 billion of asset sales, and that would get put into your earnings. So then your earnings would look good. New CEO comes in, they did that. So that's another $1 billion that they end up, having. Now, the benefit to this is that from an earnings standpoint, you're revising your earnings lower. Again, another $1 billion, right? If your intention is we're going to do this portfolio transaction going into the year and we're going to recognize $1 billion in net gains, and then you say, well, we're not going to do this, that means that now, again, you're going to take another $1 billion off of your net income. So there's another bit. But remember, these things are one-time events.
Okay, give me one more thing that UNH got hit, and then we'll move on from UNH.
Yeah, and then another thing is that I told you, and this is something I explained yesterday, where they basically priced their Medicare Advantage plan at like a 5% growth rate, and Medicare Advantage actually cost them 7.5%, right? So now you have profit. They usually get about 5% in profit for the entire United Healthcare side, but now that got cut down in half. Because what happened is they mispriced their plan. So what are they doing next year? They're raising it by 10%. They said, oh, we're going to lose probably some members, but we don't care. We're going to get our margins back to what they were. So when you combine all of those things, it's like a $5 to $6 billion positive move for next year's earnings. But of course, they're not going to project that right now. They have every intent to drive this thing as low as possible, and at the same time to buy back as many fucking shares as they can.
Yeah.
All right. Yeah. So when they do, I mean, they gave themselves such a good cushion in terms of beats and raises that eventually we're going to be talking 6 months from now about how UNH keeps beating and raising their guidance for the rest of the for the next 3 years. And what's funny is the CEO even mentioned that we're going to have results that are achievable and beatable. That means you have to do a earnings reset, reset expectations from $29 to $16. So next year, when they do 19 billion in revenue and at the same time have only 880 million shares as opposed to 910, you're looking at $22 in earnings. That's what I'm projecting anyway. And so if you do $22 in earnings, right, versus 16 right now, look at that giant bump up in earnings.
So what multiple would you give them on 22? 15?
So no, that's one of the other things. You still have to give them a pretty shitty multiple because they have to keep doing this over and over again. So probably closer to, I would give them probably a 13 multiple on it, right?
So that's a 280 stock.
Right.
Remember, that's not asymmetric, 240 to 280.
But remember, Amit, there's another thing. You have to go into now 2027, right? 2027, you're actually going to be able to do another set of huge buybacks, right? And at the same time, you're going to have more earnings the year after that. So if you go into like the numbers, earnings ends up being closer like 26, 27 in 2027. But by that time, the multiple should jump to like between 16 and 17. So if you do a 17 multiple on 27 billion in EPS, what do you get?
460.
There you go. So if you buy right now, it's like, you're buying at 240 and you get 460-ish, 450, 460. But that's with really good execution and a massive share buyback program. which they can do very easily because, like I said, they generate a crap ton in cash flow.
Wouldn't you rather buy Amazon today than UNH? Just from a risk-adjusted perspective, maybe it's not going to double like UNH could double, but I mean, what?
No,
or Nvidia, or like, how do you think about other opportunities versus UNH?
I mean, I like Amazon. I've held Amazon since the 80s, right? If you remember, like the three horsemen of my portfolio have been Amazon, Apple, and Google, and Meta when Meta was down in the 22s, right? Amazon is great, but at this point, they're like a market performing company, in my opinion. All right. This is just my opinion. I'm not saying you're starting to see some of the AWS stuff kind of creeping into the system. So I think Amazon's going to do well. If you want like good returns, Amazon is the place to be. But if you want exceptional returns, you got to buy shit that no one wants. You became, I don't want to say how much, but you became what you became because you bought Robinhood when people did not want it. Right?
Yeah.
You made money because you bought Palantir when people didn't want it. When people don't want shit, that's when you buy. I mean, it's right now, if you're buying NVIDIA, you're basically chasing the market leader. So what alpha do you think you're going to have?
But I agree with you, especially from being contrarian on an asymmetric opportunity. But some of these companies like Google and Meta and Microsoft, and the earnings they're putting up are just so yes, UNH is more undervalued. So that's my broader question is like, do you think the undervaluation matters more than the earnings?
So the key to me is that if you look out 1 year, 2 years, then you should buy Alphabet. You should buy NVIDIA because clearly they're going to be the winners, right? But if you have a 3 year, 4 year time horizon, that's when you buy the shit no one wants to buy. That's when you buy the Norwegian Cruise Lines, which is trading at single digits. Yeah. When Carnival Cruise Line is trading at, at $12. And you don't just buy then, you leverage the hell up and you buy a leverage position, and you
if you understand what you're doing with leverage.
Yeah, if you
understand what you're doing with leverage, otherwise, stay away.
So whenever you see like market movements like this, especially sharp drawdowns, typically you have to give the company enough time so that it does get the ability to change its operations and get to a point where you're much better. Rocket Lab when it was $4. Like Matt said.
And what Kris is saying right here about buying stuff that people don't want, it works. This is the Peter Thiel argument. It works if you're right. So Peter Thiel's like number one quote that he's known for is being a contrarian and being right about being that's the whole point of 0 to 1, right? Do you do something that no one wants to do, that attack a sector that no one's thinking of, but because no one's thinking of it, you kind of create a monopoly on that ecosystem because you're the only one doing it, and then you're right for doing it. So Palantir focusing on the government for as many years as they did when no one wanted to touch the government in Silicon Valley. Now everyone thinks the government, Western values, Anduril, everything's so cool. But Palantir is one of the leaders because they focused on it when no one cared about it. But the caveat on why a Robinhood worked, why a Rocket Lab worked, why a Palantir worked, why a Norwegian worked, is that the thesis was right. And that time will tell if the thesis is right on UNH or if the thesis is right on Grab.
And you have to give time. Like, I think that's the worst thing. People will look at something and just be like very short term, like, oh my God, it's down 10% today. Okay. Is your goal to get out in the next 2 weeks with 200% gains? Like, is that the plan? Like, no, I mean, you're going to have to take some risks on this. You remember the first spread play that I ever taught you was actually TFC. Remember that? How when the regional banking crisis was happening, and I was like, I showed you, Carlos, and Vitali at the time. I said, let's get on a Zoom call. I will show you how a vertical spread works. And at the time, no one wanted to buy any of the regional banks. And we saw, like, wait a second, this makes like the risk to reward is asymmetric here. Right. It was literally getting $2 for a 7x return. And right now, TFC is trading at exactly that point. So it took time, it recovered. It got to where we needed it to go. So you just have to have some patience.
And you also got to be right. That's why this game is hard. You have to have patience and you have to be right. And that's why investing is not easy. But if you are, then the gains can be asymmetric. By the way, Kris, although you have some troll comments, you got Jason right here. Thank you for the $200 super chat. Ignore them, Kris. You are a superstar. You think very beneath the surface level. All those haters could learn a lot from you. I found a mitt because of you, because you spoke about Palantir first. So
yeah.
There you go.
Yeah, we were Palantir buddies for the longest time, man. Like we did, dude. I still remember when we first started Palantir Weekly. That was my idea.
It was Chris's idea, bro. It wasn't even my idea.
I was like, this company is doing so many interesting things. I think we should talk about it, you know, and I think we should do it on a weekly basis because I think it'll help demystify how this company actually makes, you know, like these really great products. And then we did a lot of due diligence on it.
This was our first podcast.
Yeah.
Look at this.
Now
2022, bro. 2022. Look at Kris. Look at me.
Yeah.
My beard. And we talked about Palantir.
Jeez.
It was wild. It was wild. But yeah, dude, it's about being patient and being right. And you just never know.
Yeah.
Do you have any thoughts on Amazon and Apple on those earnings at all? I know you said about Amazon. Apple, do you think it's a buy after those earnings?
I have to be honest, brother, I haven't looked. Like I said, I've been so like when I look at a certain company, I end up getting tunnel vision, right?
So you're day you're obsessed with UNH now. So the wife is just hearing about UNH all day, basically.
For the entire week. I've been sleeping with my laptop. I've been writing notes on, like, I have dissected every single word on their earnings call. Literally, I've listened to their earnings call probably about 7 times now.
What, dude? You're that deep in, like,
yeah,
bro.
I could tell you everything there is to know about UNH and about like all their core businesses, what they actually do. Like I even broke it down like from Optum, because that's another thing. You know that Optum has their own bank. Like UNH has its own bank underneath that. The largest HSA company in the country. They provide pretty much the entire backbone of payments processing for the medical industry.
I don't know that.
See, those are things people don't know. And they have Optum Insights, which is a technology company within their main business that has 20% margins. That's still growing 20-30% per year. And at the same time is now like developing into AI focus. They hired an executive from Stripe to get into UNH's.
I mean, when you get that deep into something, obviously you know a lot about it, and then you get obsessed with it. For everyone saying I look like a terrorist, you can't hurt me because my mom said I look like a terrorist. So that's every day I had this beard. My mom told me every day she was like, "You look like a terrorist." I'm like, "Mom, that's racist." She was like, "I don't care. You look like a terrorist." So
yeah,
no one can hurt.
It's kind of crazy, like looking at those things, like looking back on those things now. You know where we started.
Do you like Figma? Would you buy it here?
I think everyone loves this company. So I don't know how much real value there is, because I mean, it's like 50 something billion now. What's the market cap on it?
Yeah, about 60 billion.
60 billion. So I don't know.
But do you think it's froth? Why do you think it's up 400% or 300%?
Well, I think, look, there's sometimes this thing where people love the product so much they completely ignore the valuations and they completely ignore the numbers. But then the numbers eventually become, a topic. It's like, wait a second, what did I just buy here? So I think everyone is in love with Figma. I think it's a great product. Everyone that basically I've spoken to has loved it, but I don't know its numbers enough to say like, hey, this is a great thing. I got 1 share allocated to me, but all I've basically done with it is just for tracking purposes. I haven't done any research on Figma.
Oh, you got a share from Robinhood or from Fidelity?
From Fidelity. I got Fidelity. Yeah. Yes, I need to get my hat back. I forgot. My wife was leaving today, and I was like, I'm waiting for the plumber. I'm like, wait a second. There's something I was supposed to do today. I need to get that hat back.
Dude, isn't it just in your car? You just have to go outside and get it.
It's in my wife's car, man. So
you're being too lazy. You need to get this damn hat.
It's not lazy. I'm just forgetful right now. I'm telling you, man. I've been eating, sleeping, breathing UNH. Like I could tell you some DD that I found about UNH that I don't think even most people that have done research on UNH know about. Okay,
don't get into it, Kris. You
too boring. Yeah. Too boring.
Okay. Yeah, you gave. I think that every time you come on the show now, you just gotta make sure you don't get into the UNH thing because at this point, either people are gonna buy it or not. Like you're convinced. People are. If they're either convinced, they're convinced. If not, then
yeah. Do your own research, by the way. Do your own thing. I'm not giving any financial advice. That's not why I'm here. The one thing I will say, and it's not necessarily advice. It's just something that I've learned over, I think at this point, 15 years plus of investing. Number one, know your position sizes. So when you said, hey, listen, if you have conviction in something, you shouldn't have a problem going into it heavy. But if you don't have conviction, just keep your position size to what you feel is comfortable. So that's like number one. Number two is don't follow the herd. If you follow the herd, it's great. It works in the short term, but long term, you're going to get burned by it. I got a lot of crap when we were talking about Enphase, and Enphase kept going up. And everyone's like, oh, this guy is so wrong. He doesn't know this, blah, blah, blah. And then when it crashed, it was like, Kris, you were right. What the hell happened? And that's the thing.
Let me add some context here. This is, you're getting some shit for UNH, but when Enphase was $340, Kris was one of the only people, at least that I know of, because not that many people talked about Enphase on YouTube, that said, this thing is a bubble. It's only high because rates are favorable. When rates keep going up, because at the time rates were kind of going up, but not really, this thing's coming back down to reality. And Enphase has absolutely, the one thing you didn't short it. You should have shorted it. But outside of that,
yeah, I'm terrible at shorting, man. I'm always scared to get, like GME'd or what is it called, or AMC'd on stuff like this. The one thing I still remember when we were talking about it, I was pleading with Carlos and Vitalia, like, please guys, buy some puts. Just be smart. Like, I don't even care if you don't, if you don't make too much money, just buy some puts and go to sleep happy. And
then Trump winning wrecked Saylor as well, right?
Yeah. Yeah. Rango did the same thing. We were talking about Rango. Remember, he came on and said, look, this is a growth market. And I'm like, does not seem like a growth market to me. So if you have conviction in it, no matter how many people are coming after you, you just got to go with it. Whatever makes you feel at night is what you invest in. And right now, UNH is what makes me feel good at night.
Yeah, and it's a really important piece of advice, right? And so like all the crazy DD that Kris is doing, him talking about it is probably not going to convince the majority of people because you're not doing that DD. Same thing with me on Grab. Like all the crazy DD I'm doing, some people are convinced, some people are not. It is what it is. But you become an investor when you get the hoods, when you get the Pounters, when you get the cruise lines, or at least you become an investor.
Bro, you know what? I hate you. You know why I hate you? Because I wanted to buy a crap ton of calls on Robinhood, but I never did. And I ended up buying a lot of spreads on Grab. Like I have 500 something spreads on Grab, but I only got them for 30 cents between $5 and $7.50. So I'm like, come on, Amit. Like you've got so many right. I need you to get this one right.
Well, in my defense, I've said $10 by 2027. So I've got a year and a half on the timeline. And then if it's not 10 by 2027, I'll say I'm wrong. It is what it is.
I don't even need you to get it to 10. I just needed you to get it to like 750, bro. Pump my bags, baby. Pump my bags.
But it's about conviction. Right? Someone asked the question, what dip do I buy today? It's like, what stock are you heavy in that you want to deepen your conviction, or what stock have you been eyeing for a while that you've been waiting for an opportunity? And so I think that would be your advice as well. It's like, what do you care about actually owning?
To be honest, if Robinhood dips enough and the RSI gets below 30, bro, I'm buying some Robinhood. I don't care. I don't care. I won't look at the valuation. I don't care.
What, 80? Is that your price or below?
No, there's no price. It's about like technicals, like where like usually when it gets oversold is when I typically like to buy, and oversold on a 1 year chart. So go to Robinhood and go to like the 1 year, right? And then I think Robinhood is eventually going to have like a death cross pattern. Or eventually it's going to kind of come the other way, but I'll buy Robinhood then,
I just think those earnings were, I didn't get your thoughts on earnings, but I'm sure you were impressed by it. I don't know if you get a really juicy price.
Bro, I don't care about earnings on Robinhood. I care that the CEO is a fucking boss. Like the question that you asked was perfect. And the answer that he gave was fucking perfect, dude. You could not give a better answer, because one of the main concerns with ever buying a company like a brokerage company is brokerage companies never go bankrupt. Okay, they never go bankrupt. You know why they don't go bankrupt? Because they're making money when the market goes up, and they're making money when the market goes down. They're always making money. The challenge that you run into is that there are going to be periods where, the market has a lot of transactions, and your earnings are going to look stellar. And then at the same time, there's going to be times where the market craps the bed and no one's transacting. And now all of a sudden, everyone's like, oh my God, this company's earnings are garbage. So how do you get away from that? How do you get away from the cyclicality? And dude, that was the perfect answer. Well, we're just going to diversify into multiple businesses so that this way, even if there's some volatility up and down, the other segments will catch it.
And he said our operating expenses are so low that we have the leverage to navigate when things go up or down, because we're not like running to try to save a buck here or there. We already have such little expenses that if we need to position ourselves or diversify, we are in a very prime position to do that.
Yeah. Like I said, great business model. Great. I mean, they're capturing market share, especially among the youth. Bro, I don't know a single person in my age category that doesn't have either Charles Schwab or Robinhood. You know?
Yeah.
Like it's like one of those two that I've seen pretty much everyone have. So,
dude, August 7th, we have a chance to get into the S&P. If Paramount and the merger goes through with Skydance, there's going to be a spot that's opening up. So
that's, believe it or not, but actually, before I got into the UNH thing, I was actually researching that whole thing. So I don't know if people know this, but Skydance is actually owned by Larry Ellison's son.
Really?
Yeah. Yeah.
Huh.
And so Oracle just signed a really big contract with Paramount, right? So David Ellison. Now, one of the reasons why I was bullish and I still am bullish. So one of the chief complaints among a lot of content content that's been coming on, like especially movies and stuff, is that it's been too woke. It's too driven by messaging rather than just people enjoying movies.
Yeah.
And Skydance is actually a lot more on the moderate side of things. So a lot of the movies that they basically have actually done really, really well because they've been, there haven't been the woke diversity movies that basically just turn everyone off. Like, here's an example: Maverick, Top Gun. Who was it produced by?
Skydance.
Well, let me just double check.
By the way, Hoodie back to 100, folks. 93 to 100. We got it.
I think it was, let me just double check because I'm pretty sure it was.
I'm putting Chris's Twitter in the chat as well for those that want to follow him.
Yeah. Because I think, what's his name was on a producer for it. But yeah, so I'd say look at Paramount and see how that merger is going to tie into the content game. And the other thing is John Lasseter, who was part of Disney, who did like a lot of the Disney hits. Like, I think it was Toy Story and Zootopia and all these other things. So he had some sexual harassment complaints lodged against him. And so Disney kicked him out. Well, you know who hired him? Skydance Animation. So I think there's a lot of executives that have actually moved over from Disney over to Paramount as well. I mean, to Skydance. So Skydance could really do well in the future. So it's just something to keep in mind if you think that the culture wars are kind of like turning. That could really prove to be really like a big upward move for these guys.
How much these are the Paramount for? Do you know?
I have to look at the deal that they have.
8 billion. Because 8 billion.
Because they had to buy. What is it called?
Yeah, it is exactly 8 billion.
Yeah, they had to buy a stake out from the current owner of Paramount and stuff.
Dude, it's legit expected to close. Yeah. So August 7th, if it closes, we have a spot in the S&P that opens up.
Yeah. I think the only thing that this thing was waiting on was regulatory approval. But if you look at the movies that they have, like they did the Mission Impossible thing, Transformers, they've got Maverick. Yes, so it was. So Paramount Pictures did Top Gun Maverick. The Tomorrow War. I don't know if you saw that. So, like I said, they've got a lot of hits under their umbrella. So, yeah, I think they could do really well. Skydance, Paramount together.
So, okay, so do you think S&P picks Robinhood, or do you think they pick AppLovin? Do you think they pick SoFi? Like, if you had to bet right now? Put in the chat all right, let's end the stream on this. August 7th, one spot opens up. Let me put up the list of the companies eligible for the S&P 500. Who do you think it ends up becoming? Let me see if I can get this list right here.
So who are the eligible ones?
Let me bring it up. Companies eligible for S&P. There's a good chart. I saved it a while ago.
People are saying Figma. I'm pretty sure that there's some regulations around them not being able to get in right after they IPO, but so
yeah, that would be a bit hilarious.
I'm pretty sure it'll be Hood, but I hope it's not Hood. Only because I want Hood to crash so I could buy. Okay, I need to be in this. I just don't want to pay a crazy high price for it. That's it. I'm a discount shopper. I'm a Patel. I live up to my name, bro. If it's not on discount, I can't buy it. Which is probably bad for me because that makes me buy a lot of junk too.
What was the last S&P inclusion, guys? It wasn't last week. It was the week before last week, right? It was July 18th. Oh man, it's a chart from a long time ago but anyone put in the chat. It's just the AppLovin and Hood are the largest companies, but there's a bunch of them that are out there. DoorDash, TTD, and Datadog already got in. Block didn't expect that one, but that got in. Coinbase got in.
Yeah, then Robinhood should be a shoe-in, bro.
It should be Hood or AppLovin. I wouldn't be upset if it's AppLovin, but if it's not one of those two, I'm like, there's other Carvana, yeah. MicroStrategy. I don't think they're gonna pick MicroStrategy.
Wait, MicroStrategy is not in it?
No, they're not in the S&P. They're not in the S&P.
What's the market cap on MicroStrategy right now? Like
70 billion? No, more than that.
Really?
It's 100, 106.
106.
Oh, IBKR, they could get in. Yep.
I know you said you wanted to get out, but do you have like a few minutes to talk about one thing from MicroStrategy?
Yeah.
Have you looked into STRK?
I have not, but that's one of the ones he IPO'd, right?
Okay, so STRK is a preferred shares of MicroStrategy, but there's a few caveats to it that actually make it very valuable. Unlike the other preferreds that are like I think there's like some kind of limitation. This one you can buy. It gives you an 8% yield on face value, which is $100, right? So you're getting $8. I mean, if you buy it at 106, you're probably getting like 7 something. So just, keep in mind, you're not going to get $8 on 106, but at $100, you're going to get 8% per year as a dividend. Now, what's interesting about it is that it has a call option provision in it where you can convert it after MicroStrategy goes to like 1,000 or above, right? You can convert it into MicroStrategy shares. Now, why is that important? Well, let's say Bitcoin, if you're really, really bullish on Bitcoin and Bitcoin gets to, I don't know, $500,000 and MicroStrategy gets to $2,000, you could you can convert this dollar for dollar for MicroStrategy at $1,000. So you would need 10 of these things. So you would convert 10 of them into one share of MicroStrategy, right? And you would be able to buy those things. So basically you would take it on face value, right? And then be able to convert it and get a return. But the value of those preferred shares is never to actually go and convert it. Like they don't want you to convert it. Essentially, you're going to get a dividend return, but you can convert it at any time. So people are going to value it like that, right? So if you look at the price of this thing, let us say MicroStrategy gets to like, I don't know, $2,000 and you have STRK, one, you're collecting that 8%, yield right now. And if you convert it, you can basically convert it and, buy basically MicroStrategy at $1,000. You understand what I mean?
So no, I understand what you mean, but would you actually like buy the preferreds?
Well, yeah, I mean, if you're looking for like income, but at the same time you want long exposure to MicroStrategy, this is actually pretty freaking good. It's a pretty great deal. Not too many places give you the ability to have both the long exposure and the fixed income exposure. And this is the only one that has that. The other one is yielding like a 10%, but it doesn't have that provision where you can actually convert. And the thing is, it's perpetual.
Right.
And it doesn't have something called a call provision either. So some preferred equities and bonds, they have something called a call provision. Do you know what that is?
No.
A call provision is the company at its own discretion can just say we want our security back. We're just going to give you cash. This thing is non-callable.
So are you buying it?
I'm researching it. I'm doing more research on it, just to see, like, I'm trying to make sure I'm, like, crossing my T's, dotting my I's, making sure that all the verbiage, because when it comes to fixed income, you got to know what you're buying. And I want to make sure that, it's pretty like solid, like ironclad, that, Saylor can't just come and fuck around. Not to mention it's all backed. You're basically sitting on top of all the common equity shareholders. So, you've got a lot of safety built in, but it's all based on the price of Bitcoin too. So I don't know. I'm doing the mathematical calculations to say, okay, at what point, if Bitcoin goes down, does this thing going to get absolutely destroyed? And it doesn't seem like
that money's in it. Interesting.
Yeah.
Okay. So
are you mad? You fucking bastard. You didn't tell me. The hell? See, you think I'm hiding behind a paywall? Matt, that's the guy you should all be going after. Matt's the one with good ideas and just telling everyone, listen, man, everything is going to zero.
Well, he's destroying all of us in the stock draft right now.
Yeah, but he's got he has the ones that are highest beta in his portfolio. All the companies that he has are high beta. So
yeah, well, that's fair. Do you think are you worried about Bitcoin going to zero? Because that essentially is what could collapse STRK, but I'm assuming you don't care about that.
I mean, you would collapse the economy at this point because there's just so many people in it. And I think that there's so many vested interests. I doubt it happens.
Yeah.
I mean, the only way it happens is, let's say, I don't know, the US government comes in and says, we don't want to compete against, and we're regulating Bitcoin, or we're banning Bitcoin, or US holders ban.
And Trump's not going to do that. So honestly, the MicroStrategy thing makes a lot of sense because Trump's not getting rid of Bitcoin. He's not getting rid of crypto. They're only enabling crypto legislation. They're printing more money, so Bitcoin has a natural counter-cyclical hedge against it. And if they lower rates, you'll have more liquidity. So the question then becomes, do you want to buy MSTR, which is super volatile, or do you want to guarantee 8% and just hope Saylor knows what he's doing? It's not crazy to go that route.
Yeah. So you get like I said, you get the MSTR upside while still getting paid fixed, so... Not to mention, if you think about it, if rate cuts happen, you're going to have yield-starved people trying to buy this thing because they're going to say, hey, I'm getting an 8% yield. Like right now, people are fat and happy with 4.5%, 5% that they're getting from the Fed. But if the Fed has to lower rates and you're only getting $1, $2, I mean, 1 or 2%, dude, you're going to say, hell no, I'd rather be in this. So.
This is also why UNH could get a bid if things get really bad because they have the divvy. And they're undervalued compared to the rest of the market. Obviously if they cut the divvy, that could hurt them, but I don't think they need to be in a position to cut it. In terms of STRK, you can't buy it on Robinhood, right? You need to have Fidelity.
So you have to have like Fidelity and Schwab because they have fixed income products. Robinhood doesn't. I have seen some preferred shares that on Robinhood, but I haven't seen a lot of them. Yeah, STRK can't cut dividend either. The other ones are like they can cut the dividend at any time.
Why can't they cut the dividend, STRK?
Because it's a preferred equity. It's like a fixed income. It's on a piece of paper that says you get 8% per year. There's no like, hey, we've decided that we're not going to pay you. And if they don't pay, it's cumulative, which means that it keeps getting added to it. And then
so what exactly is the risk again to STRK?
I don't know. That's the problem. I don't know. I haven't seen the risk portion of it yet. If you believe that Bitcoin is going to go higher,
because it's not backed by MSTR. If MSTR goes down 40%, you still get your 8%, right?
Yes. Yeah.
Okay, so then it has to be backed by, or it has to be, the risk has to be Bitcoin going to shit.
Yeah.
And if that's not happening, then
yeah, I think Matthias is saying it correctly in his thing. The risk is 90% drawdown on Bitcoin. Could 90% drawdown happen? I don't know,
Yeah, I mean, obviously treasuries are safer because they just don't have that inherent risk. But look, here's the other thing about treasuries. I think I heard this the other day, but the high interest rates have just made the rich more rich. Because if you already have money and you can put it into a money market fund and not take any risk in the market and the government's giving you 4.5%. But if you don't have any money, those interest rates are hurting you with the housing and the auto loans and all that stuff. But if you're rich, like high rates have been pretty damn good for people who are rich.
People are actually like, your chat is actually a lot more tuned to fixed income than I thought. I didn't think that a lot of, because you have a lot of retail followers, so I didn't think that they would know, but 8x over collateralized. So you would need yeah, that's right. So you would need an 85% drawdown.
Yeah.
And there has to be a drawdown that's sustained drawdown.
Dude, that's why
zero.
he's raising so much money, because he's getting all these people pile in, and they're not retail. A lot of the people that are buying this also are like hedge funds, right? That just want a natural hedge that's different than money market.
Well, when it comes to fixed income, though, you know, there is one major problem: liquidity. Like, you know, with stocks, people buy and sell these things all the time. With fixed income, you know, if you look at the order flow, go look it out on Webull, STRK. I think you'll see like 1, maybe 2 shares every couple of hours. Look at the volume on that. So it's not a lot of volume, you know.
Yeah, that's fair.
So the other thing is you might end up running into some weird like mark to markets here and there, where sometimes it'll jump up really high and then it'll come down really like in your portfolio. I mean, if you don't technically have to worry about it, but sometimes when the brokers actually show it to you on paper, you can see like it's down 5% on the day, and it's like, no, it's just one person sold at you know, at a very short period of time, and basically they sold it for $5 off what the current, you know, market is. So people are like, oh my god, it's down, but it's like, no, it only transacted 1 share, you know. Yeah. Now here's the thing: do your homework and do your research, because STRC, STRD, STR, whatever, a lot of them do not have the same what is it called, provisions. So be careful of that.
You know? Yeah, there's a lot of risk to this stuff, even if it sounds attractive. As Matthias says right here, they're not rated by the credit agencies either, so it's hard to get some of these other institutional investors to buy in.
Yeah. Well. Yeah, man, it just kind of depends on your level of risk. But like I said, if you want exposure to the upside of Bitcoin, but at the same time you want fixed income, I think Saylor's got it right. He's like, oh, this is great. You know, I could just basically take this, like get an entire new class of investor who's a lot more permanent capital and use that money to buy Bitcoin. Now, here's the thing. That means that he's also in his brain thinking, I think Bitcoin is going to go up at least 8% every year.
Right.
Because otherwise you wouldn't use a preferred equity. You would just do straight shares.
Well, he thinks it's going up minimum 20%. I think that's what he said, right? That's his assumption.
Listen, with the current administration and the way that they have been spending money, I don't think that's not a possibility. It just depends on your time horizon, you know. And I don't see anyone saying, hey, we need, like, do you ever see the government saying, hey, you know what, let's become responsible and start paying our debts down?
No, never.
They all say it, but they never do it. You know,
no, it's a talking point at this point. So,
yeah.
All right. I think that's it for us. Kris, thank you for joining again. You're going to have some comments here and there that hate, but you know, people love you. You're the reason this community is thriving as it is. You, Steve, Matt, all of us together. We're all just random dudes at the end of the day that are trying to figure out the markets. We'll have some wins, we'll have some losses. At the end of the day, the community appreciates. I think the reason my channel is working is because of you guys hopping into the show. It's not just me. So and when you don't have those other perspectives and have people to have different ideas and thoughts that are not always going to be right, not always going to be wrong, you don't really have a community. So
yeah, and you have to sometimes, and you know, we all kind of had the same come up. See, one of the things that people forget is that when me, Amit, Matt, all of these people, we started talking about these things, and we had 1,000 people following us, if that.
Less than that, yeah.
You know, people didn't know who I was. People didn't know who you were, but we grew our audiences. We grew our presence, and some of the things that we've said were, you know, interesting, fun, and half of this is also entertainment too, man.
Yeah.
You know.
Yeah, I mean, I think people come to the show every day because there's a lot of energy, and when Steve goes on his milk rants, like that's what humanizes investing at the end of the day.
Yeah.
So
Yeah.
Morning.
Oh, Steve, I gotta call him. Me and him are gonna be cursing Palantir. That's what we do every week. That's our like group therapy session. You know, look, can you believe Palantir is at 150? These people are stupid. And then I have to like be like, yeah, I know, Steve. I know. You know, these people are stupid. He's like, do you know Carp is diluting shareholders? I'm like, yeah, bro. I know, man. I know what he's doing. You know, I do the same thing. I do the same thing. You know,
it is a unicorn.
Been here since Ahmed had 50 to 100 people in the chat. Yeah.
There's Chris's Twitter. Please make sure to follow him. Chris, I'll
Take
talk
care.
to you later. Thank you for joining.
Later.
Later. All right, folks, I'm out. 2 hours and 54 minutes in the books. We got a bit of a recovery. Robin Hoodie, 93 to 101. Not too bad. You're getting some green right there, 101.60. I mean, in about $1, Hood might actually break even on the day. There is a headline on NVIDIA. Stock market's not reacting to it, but you got a Bloomberg headline saying U.S. government is stalling thousands of export approvals in regards to the export controls to allow NVIDIA to sell into China. I think this is a nothing burger. I mean, there's going to be delays for a ton of logistical reasons, so I don't think it's that big of a deal. But yeah, market definitely doesn't care that much about it. Even the S&P, it was down 1.8. Now it's down 1.3. You got Tesla was at 298, 307. Palantir was at 151. Now it's at 155. NVIDIA, 175. It was at 170 today. Grab was at 473. It's at 484. I mean, you are getting some momentum across the market, which is nice to see. If we can actually end up the day not being down 1% on the S&P, it means we've got some real resilience. But we got to see if we can do that. Word of the day, smarmy. Word of the day is smarmy. Excessively or annoyingly flattering. Excessively or annoyingly flattering. Their smarmy sales pitch felt more like manipulation than persuasion. A smarmy comment at the meeting made the whole team cringe.
Smarmy.
There you go. That is our word of the day. All right, folks, that's it. Thank you for joining. We'll be back later on the market close. I don't think Steve will be on today, maybe for a little bit, but he spent a lot of time on the market close yesterday. So for anyone who missed that market close, you can go to the Steve segment. We talked about all the big tech earnings. But if he's free, I'll give him a call and see what he thinks about some of the stuff going on. And we'll see if the market can end out okay for the first day of August. Figma, by the way, that one's still above 120. So Figma had hit 115 today, 121. Holding on to 121. All right, that's it. Thank you, everybody. Appreciate it. We'll be back later for the market close. Bye, everybody. Have a good one.